All right. Hello, everybody. Welcome to the Nvidia Q1 2026 earnings. We have a full house tonight. Jose, Tanner, Sam, Neil, and myself. This is going to be a big one. We've got a lot to discuss, a lot to analyze. We say every Nvidia quarter is the most important one, but this time it really is the most important one. So excited for everyone to be here, and we will get into it. Jose, let's start off with you. How are you feeling going into the print?
I'm feeling pretty good. And hello to everybody watching. Super excited for today's earnings. Yeah, I mean, we've had a really amazing rally the past month or two on the semiconductor industry. So for all of us that have been investing in this industry, we're probably pretty happy. And AI, the AI market continues to innovate, right? So we'll probably talk about it later on, but there's a few questions I hope we get answered during the earnings call that I'm curious, and more like a long-term investor. I don't think I highly doubt there's going to be anything that changes my long-term thesis out of today's earnings report.
Tanner, you have been long Nvidia for a while now. How are you feeling going into their Q1 print?
I'm feeling really good, man. I hope we see an 8 handle on revenue. I want to see 55% net income margins. I think that would be really interesting. I'm also really interested to see how their recent equity investments. Can you guys hear me, by the way?
Yeah, you're good. You're good.
My mic's not even plugged in.
Oh, no, you're right. It's actually, your computer mic's decent, but yes, you should use the regular one.
Give me a sec.
Okay. We'll go to you, Neil. How are you feeling going into the print?
I'm feeling great. I've got 7 shares going in. But now, wait. Now there's an echo somewhere, no?
Is there an echo now?
Hold on. Neil, keep talking. Let me mute Tanner. Yeah, Tanner.
1, 2, 3. Basically, what I was saying, I'm going into this.
Tanner, you have an echo. You got to fix that shit.
Mute me. I thought you muted me.
Okay, so I'm going to have to mute you for the next 3 hours every time someone's talking. Or you mute yourself. Just make sure to. Okay. All right. Neil, go ahead. Sorry, Neil.
Canadians. Swear. Basically, now feeling good. Got 7 shares of Nvidia. So quite confident that we're going to have a very, very good quarter. No, but I mean, it's important, but I have a feeling it's less important than a year and a half ago. Like a year and a half ago, we were all like, oh, what is Nvidia going to say? But now we're like, okay, all of the hyperscalers have already increased CapEx. We've heard from CoreWeave, Nebius, Memory. Okay, maybe not Micron yet, although we did hear something from Micron earlier today. So all signs lean towards a solid beat by Nvidia. I do think they're going to talk about CPUs a bit more this quarter.
Yeah, I would agree, especially with what we saw with AMD and Intel's CPU ramp, obviously. So that is probably going to be an important one, given Vera is the CPU and Ruben is the GPU. Tanner, we'll get back to you now. What are you expecting going into the print?
Let me just tell you what Tanner's going to say. Tanner's going to say, I'm bullish Nvidia, long-term investor. I know Jensen is going to give us a lot of great information, and I'm here just to have fun.
Yeah, Tanner, honestly, you could just use your computer mic because even that might just fix everything today. But while we're waiting for Tanner.
Okay, can you hear me now?
Yes.
Oh. Okay, I just needed to switch over to my headphones, but you're literally calling upon me at the worst possible time.
Okay, what do you think for Nvidia?
I'm super excited. I want them to get $80 billion in revenue, and then I want to see if they could possibly do it for next quarter. I think next quarter is going to be so important. There's a possibility. I'm not saying this is a probability. There's a possibility that we see over $93 billion in revenue next quarter, which would lead to 100% year-over-year growth. I think that it's incredible whenever people talk about NVIDIA. And I know a couple people have posted about their deceleration in growth, and now they've started to re-accelerate again. If they can continue to bring that back to triple digits again, I think that justifies a lot of, the conversations about, can we have a $5.7 trillion company? Can we have a $6 trillion company? And, what is the valuation of that? Considering, obviously, NVIDIA has done very well with the chips for training, But now we're seeing for the first time ever that TPUs are starting to go after this space. Like there's a lot of people questioning. Well, not inference. TPUs have definitely been in inference for the longest time. NVIDIA's dominated training, but now TPU for the first time ever is stepping into training. So in inference as well, obviously they have Grok, but there's a lot of competition now really starting to step up. Trainium, TPUs, we have Cerebras now. There's a lot of companies that, people are wondering, can NVIDIA continue to grow at this rate with all these additional competitors? And if they put up guidance that is even remotely signaling that we're about to put up 100% growth, I just think that's a massive bullish sign. So I'm very optimistic right now, but it's going to be a lot on guide.
If I can real quick, I mean, I think right now the AI market is evolving so much that we're going to see a lot of these different chips show up, right? And it's like, I agree with Tama where the market is questioning, right? Is TPU the NVIDIA killer? Is Trainium the NVIDIA killer? Is Cerebras the NVIDIA killer? But it's just this market has gotten so big that even if you play in certain niches, you can still be a big winner. But I think NVIDIA is going to continue to be like the top dog for the whole pie. I mean, that LPU that they got with the Grok acquisition, I think that alone is going to be a game changer and super. Hopefully, we hear a little bit more about it. Right, we kind of got a nice amount of information during the GTC event about the LPUs, but we'd love to hear if there's been any market change on LPUs right now, because I think they talked about 25% workload when it does release. If that gets a little bit larger just in the past few months, I think that's extremely strong, showing strength of their innovations, which I think is going to continue to dominate.
Sam, you've been playing the AI trade not through NVIDIA, but through smaller companies. Obviously, NVIDIA's earnings will have an impact on those smaller companies. What are you looking for on this print?
Continued acceleration of growth, which I don't think we're not going to see. I don't think we're not. Anyways, you know what I mean? I do think we're going to get that 8 handle on there. Definitely think there's going to be a reacceleration. And I do think that we're going to get continued acceleration this next quarter. I think last quarter was like the second or third quarter that we accelerated the data center segment. And I do agree with you guys. Like, I think they're going to be talking about CPUs in this one. I mean, look at just the performance of ARM into the NVIDIA print. Look at the performance of AMD into the NVIDIA print. Like, look at anything that has to do with CPUs is running into this print excessively. Even when we had the pullback, these have dramatically held themselves up and continue to accelerate. So even Marvell has done very nicely in the last week. It's practically near an all-time high today. It made a new 52-week high today. ARM is probably going to have, I believe it's going to have its highest closing high if it does stay around here toward the end of the day. Like, I think that's the market pretty much telling you, like, look, this is CPU is definitely going to be important for this, but dude, like 50%, 60% of my portfolios in semiconductors are in some way, shape, or form related to semiconductors, whether that's data centers, hyperscalers, analog chips. So, I definitely have a lot riding in here, but justify that these grew into their sizes. I mean, a lot. NVIDIA obviously has doubled since the tariff tantrum, more than double since then, like about 1.5 times 1.5 times appreciation in terms of stock price. But these other semiconductor stocks have done like a 10, 15 times, maybe a quad times, whatever. I wish I was in Micron like Neil. Neil is freaking like taking a shower over there. Like, he is just basking in glory. I have 7 shares of NVIDIA. It's like, but I got 1 million shares of Micron. I'm a millionaire here today. So congratulations, Neil, for that one. And Jose has definitely been in the AI trade, the semiconductor trade for a long time. And I mean, I don't think any of us can tell you how the stocks will react. They're going to have a great quarter. It just depends on how we open tomorrow, right? So that's the tough part about it, knowing how the stock is going to react after the earnings.
So we have the pump and dump poll live in the chat, so everyone can give us their pump or dumps. Triple V, thank you for the super chat. Deeply appreciate you being here. He's also a very large shareholder of NVIDIA, been part of the story for a while, so thank you for the super chat and being here. I agree with everything you guys have had to say. I think they're going to crush the earnings. My kind of core takeaway, or like at least preview before we get into NVIDIA, is I think everyone knows they're going to crush. Like, every earnings we've had for every semiconductor stock has signaled that it all comes back to NVIDIA, whether it's Amkor, whether it's ARM, whether it's AMD, Intel, CPUs. Jensen's been talking about CPUs since GTC in January. Like, there is constant information that we have that CapEx is going up, demand is insatiable. And obviously all the suppliers in regards to NVIDIA supply chain are having record earnings. The question now becomes, what market cap is the street happy with? Because if NVIDIA were to get a multiple that is substantially higher than what it is today, which given the growth rates, which might hit triple digits, as Tanner was saying, that is obviously justified, you're looking at a market cap of almost 7 trillion if you get to that PE rate where it's not 25 times forward. And that would put it at much higher than 8% of the S&P 500, which is why every time after NVIDIA earnings, it's dumped. So I guess the question is, does everyone think it's going to dump again following the trend, which is why we pump? Or is everyone so bulled up because all the SMH is up 50% this year, NVIDIA is up 18%, so NVIDIA needs to match that and go even higher, and then the expectation ends up leading to a dumping like it does every time? I think that's the big question today. 64% of people say pump, 36% say dump. If we had to go around, Neil, what do you think, pump or dump?
I mean, I've looked at the implied move. It says 7%, so it would bring us back to, I think, all-time highs or close to it. So I guess we go up. That's my move.
Jose, what are you thinking?
I wanted to be bearish.
NVIDIA is up 35% from the lows, so we did have a pump theoretically from March.
I wanted to be bearish just because the market tends to do the opposite of what I think, especially during your streams. But I can't do that to NVIDIA. I'm 100% bullish. I believe a pump. I think this is a quarter where you have surprises, right? You have the potential for surprises. We talked a little bit about it here, the CPU space, right? There's the opportunity for that to be extremely strong for them. Obviously, then the AI chip market, agentic AI, is going like no tomorrow, and we're seeing a lot of innovations just in the past month or so. So I'm really leaning to a strong guidance, and I hope the market gods are listening to Tanner, and we do get that triple digit year-over-year growth on guidance for quarter 2.
All right, Tanner, you got 30 seconds. What do you think?
Yeah, I think it'll pump. We just recently saw these 230 prices, even 240 in the after hours during the China news events. But a lot of that growth can be seen in US markets if we do hit triple digits in guidance. And so we don't necessarily need China in order to continue to pump numbers higher. So I think that we could pump back to those numbers that we saw recently.
All right, here we go. A lot of money riding on this one. The fate of the U.S. stock market riding on this one, and by proxy, given CapEx and AI is basically all of our GDP growth, the fate of the U.S. economy riding on this one. No pressure for Mr. Jensen. Here we go. It is Wednesday, May 20th. Thank everybody for being here. Nvidia Q1 2026 earnings. The stock market is now closed. And now we wait.
I have never been a fan of the mute gang, but now that I'm wearing headphones, I completely get it, and I'm absolutely anti the bell. That was brutal.
Dude, didn't it get you pumped?
No, it's ringing through my head.
Do it one more time. He needs to listen to it again.
Yeah. All right, see you later, guys.
All right, here we go. This is, so we usually get it at 4:05, right? It usually takes a couple minutes.
No, way later.
4:20. Yeah,
way later.
Come on.
Oh, remember last time it was
first
4:30.
time.
No, but last time it was late.
Last time I think it was 4:30.
It was 4:30. Yeah.
Jose, did you post your F5 GIF?
Yeah, it's on schedule. I scheduled it like a year ago for every quarter.
Okay. For the next 10 years.
For the next 10 years.
Okay, let's do Intuit and Elf before we get Nvidia. Intuit software company, they did lay off 17% of their employees today, or announced that. Intuit goes red. This is another name that's been chopped in half during the SaaS apocalypse. They beat on EPS by 2%, 1280 versus 1257. Revenue, very small beat, 8.55 versus 8.54. Revenue's up 10 year over year. EPS is up 10 year over year. Fourth quarter adjusted EPS, the street wanted $3.15. They're coming in at $3.62. So that is a triple beat. Revenue, EPS, and the guide. Stock's down 5. Software names, they are not getting the love. And part of that 17% layoff, I think, was to hedge against the street, basically wanting their margins to get better. And so you're seeing more layoffs happen as well. We saw that with Meta the other day. You also have Elf. That's up 1.4. Don't have their numbers yet, but we will take a look at it. Intuit CEO, we delivered strong third quarter results driven by our AI-driven platform strategy. We have ignited significant growth engines across the company, including disrupting the assisted tax segment, expanding our money portfolio, and serving mid-market businesses that are going north of 30%. The market does not care. Stock down 7. Okay. That is what you have from Intuit, now down 8%. Nvidia up a little bit right here after the bell as we are still waiting.
Weren't layoffs just announced earlier?
Yeah, for Intuit.
Yeah.
Yep.
Jose, he did the thing. Jose, he did the thing.
Yeah, I know. I already, not even 10 minutes in.
What thing?
Oh, did he say it? My bad.
Oh, yeah. Oh, yeah.
I let him go off.
Tanner, so you're at the Google. You're at the Google event right now. Any insight on Nvidia based on seeing these quadrillions of tokens that Google is generating?
You know what's so funny is Google's one of the largest purchaser of Nvidia chips. Nvidia is not in the talks here. It's all about TPUs. It's all about Gemini, but not a lot of Nvidia talk, to be honest. But it's been a lot of fun, honestly. There's like the team at Google is very, very smart, and I'm super excited what they're going to do with a lot of these models, specifically Gemini Flash 2.5. But yeah, no real insight for Nvidia, I would say. Just more token demand overall, which is going to, be a beneficiary for Nvidia. But yeah.
I don't know if you saw this headline today, Tanner, while you were there, but Google announced a new $15 billion investment in building data center infrastructure in Missouri, including a new data center in New Florence, Montgomery County. So
I thought I read something about they're starting a new NeoCloud business with Blackstone or something. Did I read that?
That is also happening. That's kind of crazy, right, Jose? Like the hyperscalers are becoming NeoClouds.
That one's so weird to me, right? Because I mean, it's Google has already Google Cloud. Like it's that one. That one's still. I would love to hear maybe either Tanner, Neil, or Sam's thoughts, or even your submits on why would Google want to do that, right? They have Google Cloud already. What's the point of building another NeoCloud player? It's is there going to be a niche space about that, or it still confuses me after I read it numerous times.
My take was they need even more compute. And I don't know, you would think they would give the deal to a separate NeoCloud to just get it done. But I guess they see more vertical integration in this partnership, and that's why they're doing it.
Higher margin for them.
Higher margin. Yeah.
Are they starting a new subsidiary for this that maybe Blackstone's taking an equity stake in?
That I think that's
they're the majority owner, apparently.
Yeah, and they're going to be the ones mainly financing, I think.
Then that's what it is. They want an equity stake in this company, but they don't just want Google stock. They want a pure play, but they want to work with Google. Wouldn't that sound like the logical reasoning here? They don't just want to keep giving debt.
Yes, that's very fair. Elf is not out yet, guys. Still waiting for that. Again, Nvidia will take a little bit. Elf, oh no, I think it is out. Elf is up 8. It should be out in a second. 8%. Looks like it's a double beat. Okay, beat by 10% on EPS, 32 cents versus 29 cents. Revenue, 449 versus 423. That's a beat by 6%. Adjusted EPS guide. I don't have the guide yet, but I do have the EPS and revenue beat. Revenue's up 35% year over year. EPS is down 59% year over year. Part of the reason the stock is taking a hit this year. You got a double beat. People are buying makeup. People are buying chips and they're buying makeup. Right here. ELF up about 5.4%. Again, Nvidia should be coming out in about 15 minutes, maybe 10 minutes, but about 10 to 15.
Do you think Jensen will talk about some China info from the past couple of weeks, or he's not allowed to say anything?
Well, that's actually
I'm sure there's going to be Q&A on it.
I'm actually scared about that because there were a variety of headlines ever since he came back that not only can't he sell the H200s, but China's banning chips that are even worse than the H200 because they want to support domestic supply. Now, with China, you don't know with all these headlines going back and forth, but I would assume they're going to guide again with China at 0, like they've done for basically a year, which should be bullish if they're able to grow 90%. But it is one of those things, maybe the street's not going to get the answer they want on that. Elf is guiding below the expectation for the fiscal year. Street wanted 1.86. They came in at 1.865. Not that crazy, but it is a miss. And then adjusted EPS, Street wanted 360. They're going for 332. That is a pretty ugly miss, 30 cents lower on the full year guide, at least for now. Elf right there, still up 4. Urban Outfitters also had earnings. EPS 130 versus 116. That's a beat. Revenue 148 versus 144. That's a beat. EPS up 12 year over year. Revenue up 11.4% year over year. Obviously, these companies are super small and they don't matter that much to the broader economy, but they are consumer plays. And knowing if people have enough disposable income to buy shirts and pants and new jeans and makeup and lipstick, that stuff, still does matter when we think about analyzing retail sales. And quite frankly, the disconnected consumer that we have from AI CapEx, which is not necessarily showing up in all these consumer different stock earnings that we have. Nvidia right there, 0.3% up after hours.
I had this amazing conversation yesterday regarding who is going to lead in AI over the next few years. Not just next few years, but over the next decade, I guess. China or the United States, and what is the real bottleneck? I think a lot of the consensus amongst the people that were having the conversation was that energy is the real bottleneck, and China has an unbelievable advantage. This was very much the same conversation that Jensen had with Dwarkesh in terms of China doesn't even need the best chips. We can just sort of, they can manufacture 7 nanometer chips and, do 10x, 30x the quantity. It's maybe a quantity game over quality. I'm curious if you guys think that that's going to have an impact on some of the broader, chip companies and American AI names over the next little bit.
I would say I think I personally believe AI is critical for national security, and I believe AI needs to continue to evolve here in the United States. So I think the current whatever administration needs to make sure that we don't put too much red tape in the innovation of AI data centers, because what you said, Tanner, is extremely true. They have not unlimited, but the amount of power that they have compared to US is insane, where they can make 10 times more chips, even if it's worse, and they can still kind of have the same computational power. So that's, and I think we are seeing, obviously it forces innovation here in the United States even further. It forces innovations to maybe have even better chips and better performant chips in general. So it does create for US tech companies to continue to find ways out of these hurdles. And overall, still bullish, but I don't think it's going to impact at least the semiconductor industry in any of our investments anytime soon.
Sam, any thoughts on that? Oh, sorry.
Yeah. No. Sam, your thoughts on energy bottlenecks. And I think the better question here, Sam, is do you think Jensen's going to talk about all these bottlenecks? Because that's where all the alpha is going from, at least the investment community, photonics, memory. Everyone's trying to find the bottleneck energy. Do you think Jensen will be discussing that today?
This guy is like the master pumper. I mean, he pumps every single company. Remember that earnings? Didn't he mention Palantir? No, actually, that was a Microsoft earnings call. But if you really think about it, he's going to talk about all these bottlenecks, because at the end of the day, it's all going to help him. And I mean, really, I do think energy is another bottleneck that is going to be like the next big one. I position myself for it. I keep on seeing these charts and data saying that you have all these data centers being built at a rapid scale, but there's not enough energy to power them all if they are able to come online. So there's going to need to be a lot of momentum there. And he has mentioned this in the past, but it's been mentioned more in some interviews with Nvidia CEO Arcady Velaz. So, I think whatever regime that we're in that is somewhat of a bottleneck for data center, he's going to talk about it in one way or another, or the analysts are going to ask him about it. Yeah, I mean, I think the market's kind of telling you that, right? That energy is a bottleneck today. Look at GEV year to date. Look at all these energy stocks year to date. Not like the oil stocks, but the energy data center stocks. Like they're all up dramatically year to date. So one way or another, his investors are going to tell him to say that.
But we can say that the bottleneck is energy, but America's not even producing like a fraction of what China's doing in terms of energy for solar, for nuclear. For us, it takes 10, 15 years to set up a nuclear plant. In China, it's taken them 3 years.
Well, it's significantly cheaper for them to do it over there. For us, it's much more expensive to draw out that energy. And it's mostly due to the locations of the resources that are available to us, but also the labor. Labor is significantly cheaper in China than it is over here. Plus, there's probably a lot more policies. I think it probably helps the fact that they pretty much have an absolute monarchy, whatever it's called. Like, I'm not a huge
Monopoly.
Monarchy. So I mean, like whatever Xi says
You
is
mean
going to happen,
dictatorship?
right? Dictatorship. I don't want to offend anyone. I don't know. Like, you know what I mean? Like it's not a democracy over there as it is over here. So whatever is going to happen to help to put them ahead is going to happen. But I think it's more because of how much access to resources they have. Like, we don't have significant amount of resources here. We're the number one importer in the entire world. China is one of the largest exporters in the world. So they have all that available to them. The only issue is that not many people are going to China for this compute other than mostly China and maybe surrounding countries. They're all coming to the US for it with Silicon Valley here.
That's a good point.
Yeah, but I mean, you see a lot of conflicts happening right now. UAE, if we ended up seeing that Huawei continues to make better chips and then they end up seeing better models like DeepSeek V4 or something like this, the political landscape can change. I mean, there's a possibility where Chinese models become very, very good because they have really good compute. So I think that because America is leading doesn't mean that they're going to lead in the future. And I know that people say, hey, like America always wins, but it's actually in a lot of innovative tech, it's actually not true. EVs, batteries, solar, like China has taken the lead in a lot of those where America was the leader before.
Yeah. That's why we ban all their stuff over here, because
I know, but that doesn't ban other countries from buying those things.
Yeah, no, I mean that makes
also
sense.
not true. Like we buy all their solar,
Well, I mean, like the EVs, for example, like there's not a single NIO or BYD over here because the tariffs on it are extremely high. Like they'll be losing money to send it over here. You go to Europe, like I'm sure Neil knows, like, dude, there's a BYD like everywhere. Everyone has a BYD out there, and those are good cars. Like I'm not gonna lie, I'm American, okay, guys, but like those are good cars, and they're significantly cheaper than the ones we have here. Like everything is at a premium over here, and that's done for a reason because they want you to buy US. They want you to buy US products or products that in some way, shape, or form benefit us.
And Tanner, also one thing, I mean, I think Jensen said it best. We didn't wake up losers here in America, right? So we're going to keep going strong, and we're going to have companies like Anthropic and OpenAI going to continue to produce some amazing models that I think most of the world are going to continue to use these models instead of anything we see overseas.
Didn't Trump tell you, like, we're so tired of winning? Like people are complaining about, no, just kidding around. Sorry, go ahead.
I completely agree with you, by the way. I don't have a single Chinese investment, and all my money is tied to US AI stocks winning. So I'm completely playing devil's advocate here. But I think these are important questions as China continues to not use Nvidia products, but literally turn them away. Say, hey, I know that you guys now want to turn around and actually want us to buy H20s, H200s. We don't want them anymore. That's third-party risk. We don't want to play the political chess. We're gonna keep over here. And these are risks I think that people should at least be taking into consideration. So then if we have new models or new changes, that we don't get completely blindsided as shareholders.
Sorry, Neil, go ahead.
No, I want to say I do agree with Tanner's devil's advocate arguments here. It is a very valid concern, although right now, I think US tech has one huge advantage, which is distribution. So iPhones, Android, laptops, everything. Well, most of those things are still American companies, and the models will sit inside those American ecosystems. Could that change in the future? I guess yes. With phones, we have seen that change a little bit, although Apple is still extremely popular, even in China. But energy-wise, yes, there is a big problem, whether it's in the US or even in Europe. It is a big issue, and like Sam says, yes, here in Belgium, there are like 10 Chinese brands that pop up every single day. There's a new Chinese brand that pops up and drives. Quality-wise, I don't know if it's that much better than a German car, but they do pop up everywhere for sure, because cost-wise, it makes sense. And so people look at the best value for money for them right now. But the energy advantage that China has is a valid concern. And losing China is just probably one of the worst decisions over the past couple of years.
All right, we have.
agree.
Go ahead, Jose. Last thing on this.
Last point. I was going to say, data centers are the only way you can run AI is through data centers, and data centers are mainly ran by the big four, right? Your all US based companies: Google, Microsoft, whoever, Microsoft, Google, and Amazon. Those three, and Oracle. So they're the ones. I feel they're going to be the ones buying in US-based chips opposed to China-based chips. It's not like a random data center company is going to be popping out of nowhere. And in a lot of other countries, if they are building data centers, they're also going to have a similar power issue, right? They might take time to build to get power. So if you have power issues, are you going to go with a company that you need to have a lot more chips and a lot more power? Or are you going to go with the company and technology where you need less chips and less power as well? So it's not like the consumers are the ones buying the AI chips. It's these big companies that need all the other tools as well.
Okay, I think we got 2 minutes going into it. Applied Digital just announced that they surpassed a gigawatt of connected AI data center capacity, going back to this argument about energy and capacity. That's up 7%. So again, these smaller companies, even as they've transitioned from different business models around Bitcoin, we have so many compute constraints that if they have capacity, then their stocks can get the bid. ENS just had earnings, 988 versus 973 million. That's a beat. Revenue, 919 versus 299. That's a beat. Net income, 77 million. EPS, 205. ENS, that's also up 3%. Very important as well when it comes to energy infrastructure. Intuit repurchased 1.6 billion of stock, and they're doing an $8 billion buyback. They just announced the stock is down 10% as the street doesn't seem to care. And in about a minute, we should be getting Nvidia. Real quick, does anyone think there's any metric that they're worried the most about, whether it's gross margins, revenue acceleration, OpEx, or do we kind of all think they're going to come in line?
I think obligations is going to be crazy. How much obligations they have of future inventory. I think that number is going to be over 100 billion this quarter. I think last quarter was 90 billion. It's going to be interesting how the street looks at that, right? Are they going to like that? Or are they going to hate that they have that much money on potential products in the future?
All right, I'm trying to see the numbers. Stock is making a little bit of a move down yet. Nvidia, first quarter 2026 revenue, 81.6 billion versus 79 expected. That's a $2 billion beat.
Yeah,
that's a $2 billion beat. EPS 187 versus 177. That is a 6% beat. Revenue is up 85% year over year. EPS is up 131% year over year.
What's the guidance?
I don't have the guide yet. Should be getting it any second. But you have a double beat. I mean, $2 billion beat. Pretty decent. The guide's important. Operating expenses guide, Street thought it would be 7.9. They're at 8.3. So they're spending a bit more on OpEx. Stock obviously is starting to sell off 1.4% right now. 219 after hours. We're still waiting for the guide. Data center revenue was 75.2 versus 73.4 billion. Guidance. Street wanted 87. They're guiding for 89 to 92 billion.
We're going to get it. We're going to get 100%.
Second quarter revenue growth, again, 91 billion plus or minus 2%. Adjusted gross margins at 75%. Second quarter adjusted gross margins, they're guiding from 74.5 to 75.5. And data center revenue again came in at 75.2 versus 73.4. The street is not a happy camper initially on these numbers.
Yeah,
As we are
I
down
care less about what the market wants right here. Like, I mean, they're selling off. That is a phenomenal beat. Guidance looks really good. They're on track. If they beat what they just beat last time, I think they just beat this quarter by $3+ billion. So if they beat that quarter by $3+ billion, they'll pass the 100% mark.
They are adding 80 billion for share buybacks, up from 60 billion, and they're moving to a new reporting framework with 2 platforms. I'm not sure what exactly that means, but a new reporting framework with 2 platforms.
Isn't it crazy? A company potentially going to grow 100% on the next quarter, trading at a 4 PE ratio of like 25, 24. Like Tanner said, I don't care what the market is doing right now. This is just insane.
I mean, can someone calculate the second quarter guide at 91 billion, or sorry, 90, let's assume 92.8, which they'll probably do 93.
Yeah, 93.5 is 100%.
Okay.
So slightly more. We're probably at 98, 99%.
Okay. So that's the second quarter in a row they've accelerated growth.
Not second quarter in a row. We're like 4 or 5 quarters in a row now.
Well, I guess
I've shared the link in the chat if you want to pull up
above 60%.
some things.
Okay, so we'll dive deeper into these numbers, get a little bit of coverage right here, and then we'll keep going.
So we are getting EPS, adjusted EPS at $1.87 with revenues of $87.62 billion. This is a beat, but yeah, so it's a beat on the revenues. We're not going to compare EPS just yet because it does include stock-based compensation expense. So we're just going to double check that. They also posted record data center revenue at $75.2 billion. The non-GAAP gross margins for the quarter also came in at 75%, which was in line what the street was expecting. Most buy-side numbers were also 75%. Many people were anticipating this return to shareholders. The company is increasing its quarterly cash dividend from 1 cent per share to 25 cents per share of common stock, which will be paid out. And so again, we are seeing the revenues. I just want to reiterate that $81.62 billion. Buy side was expecting between 81 and 82 billion. That could be contributed to some of the stock drop. I'll have more in just a few minutes.
But just to underscore this, Christina, the one.
Tanner,
so a 24-cent increase in dividends.
So glad I own this stock for that dividend, man. I'm gonna be freaking rich. So Neil, what are you gonna do with your $1.75 now?
Pay the tax man, I guess. I don't know.
They bought back 20 billion. 20 billion in Q1 in dividends and buybacks. They have 38.5 billion left. They authorized another 80. They increased the dividend. Well, hold on. 1 cent to 25 cents is a pretty big increase, to be honest. Like, that's 24 more cents. That's, I mean,
yeah,
yes.
It's actually not that small of a deal. I mean, you guys are making mincemeat out of it, but they can return so much money to shareholders because they have such an advantage. So I would look less at the actual cents and I would look more at the rate of increase in dividend, because that's what they can continue to do. If they want to bring this from 25 to 75 cents next quarter, they can do that. If they want to bring it from 75 cents to $2 next quarter after that, they can do that. You know,
fair point. Yep.
Go ahead.
Go ahead, Sam.
I was just going to say that I think this is what people are not giving credit to NVIDIA so much, is that whenever they're this profitable, they have such a high return on invested capital. They are investing in these businesses, and those businesses are doing extremely well. They can throw a lot of money back into the ecosystem, but they're at such a scale now. It's like, what do you want them to do with this money? So they're going to buy back shares and they're going to return money back to shareholders. And that is, as companies mature over time, what you want them to do. But I think investors are a little bit confused right now because do you call this a mature business? Because obviously they're at scale to be a mature business, but they're also growing what could be 100% year over year next quarter. So that doesn't look like a mature business. But R&D as a percentage of revenue keeps falling. So there's all these signs of this being one of the greatest capital allocating businesses of all time. And if this sells off by 1 or 2% on earnings, don't freak out about this. We've gone from 170 to 220. We're sitting at a new medium now. You know, PE ratios will adjust tomorrow as we end up looking at the last 12 months earnings go up way higher because we just beat on EPS by 6%. So what was the EPS, Amit? Like up 130% year over year?
Yeah.
You're replacing the quarter from last year with this new quarter that's 130% higher. That's going to greatly reduce price earnings ratios. That's going to allow them to buy back shares because it's cheap. Because what else do you do whenever you're literally a cash generating machine? They are a money printer the same way that Jerome Powell or Kevin Warshone's a money printer. I mean, seriously.
So real quick, Jensen quote on the press release: the build out of AI factories, the largest infrastructure expansion in human history, is accelerating at extraordinary speed. Agentic AI has arrived, doing productive work, generating real value, and scaling rapidly across companies and industries. NVIDIA is uniquely positioned at the center of this transformation as the only platform that runs in every cloud, powers every frontier and open source model, and scales everywhere AI is produced, from hyperscale data centers to the edge. On top of that, NVIDIA says Vera Rubin is on track for the second half of this year. NVIDIA CFO said we had no shipments of data center Hopper products to China, whereas in Q1 of last year, they had 4.6 billion. So China went to zero in terms of that revenue base. And then on top of that, NVIDIA is transitioning to a new reporting framework that better reflects its current and future growth drivers. NVIDIA will have two market platforms: data center and edge computing. Within data center, NVIDIA will report two submarkets: hyperscale and ACIE, which incorporates AI clouds, industrial, and enterprise. Hyperscale will include revenue from the public clouds of the world's largest consumer internet companies, while ACIE addresses NVIDIA's growth opportunity in diverse AI purpose-built data centers and AI factories across industries and countries. Edge computing highlights data processing devices for agentic and physical AI, including PCs, game consoles, workstations, AI RAN base stations, robotics, and automotive. So you've got
That's
a
an
chain
important breakdown. Yeah.
I think that makes sense too, right? Like, as the company is maturing in terms of how they ultimately
it's addressing the concentration concerns from the market.
Correct. Stock's flipping green. It went all the way to 218, now 225.
So data center, like we said, 91 billion. Data center this quarter was $75.2 billion, 92% year over year. Next quarter, just revenue is $91 million. That's 94.7% growth year over year. This quarter is 85%. So I do wonder.
In million, but it's very, very different than billion.
Oh, I said my bad. I mean, come on, million, billion. It's a big deal, man. It's not a big deal. Just kidding. So I do wonder what data center is going to be for next quarter, because data center, do they give guidance for data center or segmental guidance or no?
No.
Just directional commentary, but never like a true guide.
So data center this quarter was $75.2 billion. Total revenue was 81.2. So that's like pretty much most of it. So if we consider that data center revenue of July last year was $41 billion. Wow, that's a reacceleration of data center growth. That's like almost 100%, right? If we that's ridiculous.
That's where all the growth is coming from.
Yeah, no, I just want to make sure, because they're not guided for data center. So I just want to make sure data center is like another acceleration on top, which it clearly is. See, I remember like when data center actually decelerated like a year ago, and this is the third quarter in a row where data center has accelerated, and they're going to beat those numbers again. So we're looking at triple digit data center growth again on NVIDIA. Like, this has to be up. Like, this is, I guess maybe the market's going to do whatever it does, but like, this stock needs to be up. Like, this is a third quarter of reacceleration data center. And on top of that, EPS grew 100%, which means that the stock is now cheaper than it was 31 minutes ago, or 11 minutes ago, actually.
All the other names are pumping or trying to pump. You got CoreWeave, Nebius, Micron, AMD. I mean, they're trying to make the move. Nvidia once again going red. So this is almost an exact replica of what happened last time.
Yeah.
We pumped to 200. We went up to 205, came down to 199. And then throughout the after hours, we woke up at like 194. And then we ended up at 180. Don't say it.
Thanks for that energy. I love that.
I'm just reacting to the price. These numbers are unbelievable again.
Yeah.
But I think we all knew the numbers would be unbelievable, which ironically made them believable. And now the market is believing them. And down the stock.
I think the company is definitely making that shift, and Tanner was talking about it with the shareholder return. We saw the extra massive addition in shareholder buyback, and I do believe the dividend is big. I mean, that's a lot. If you own a nice amount of shares, that's now a nice paycheck of dividend. I think I'm considered a dividend investor now. I'm pretty much Tanner as well.
Look at you, PPC Jose.
But I wonder if it's telling us a little bit of a story of what Nvidia thinks of the AI market right now, where Nvidia itself is not a mature player, as Tanner mentioned, that is still growing at triple digits expected next quarter. But is it telling us that the AI ecosystem is now mature enough where the past year, NVIDIA was doing a lot of investments in a lot of different AI companies, in a lot of different semiconductor companies. And Jensen mentioned the reason I did it is because I wanted them to survive. I wanted them to continue until the moment that AI was truly here, where they didn't need my help anymore. And I wonder if this is an indication where NVIDIA is not going to be making as many investments in individual companies starting from here on out, because they truly believe the AI ecosystem is stable enough where it doesn't need their help, and now they can kind of use that money to return it back to shareholders. So that's how I'm reading that. I don't know if maybe I'm just so stuck in the weeds here that I'm reading it the wrong way, but would love to hear what maybe some of your thoughts are.
No,
I think that's a... Go ahead, Tanner. You got it.
No, please. I've been talking too much.
Actually, let's get a little bit more coverage on this first, and then we'll answer Jose's question here.
I know that
Okay.
whether China was going to be a factor in this. So within the CFO comments, Colette Kress did reiterate that there were no shipments of data center Hopper products to China that occurred during the quarter. This kind of runs counter to what Jensen Huang told me at GTC back in March, that he got the green light from both sides, that, you know, these orders had come through. So something happened between GTC and then, you know, since Howard Lutnick, when he testified at the end of April, those orders, something happened to those orders. And so perhaps on the call, they'll reiterate that, but I'm assuming that this is, again, not going to play any role in their revenue outlook going forward.
All right, Christina, thanks.
Stock firming up. I wonder if
really
people are
is.
saying, okay.
So again, no China revenue. Stock's still relatively flat. To your point, Jose, yeah, I mean, if they're going to start giving dividends at an accelerated pace and buy back the stock, maybe they don't need to be putting these $2-3 billion investments into all these other smaller companies. Jensen publicly said that their last investment in OpenAI and Anthropic is going to be the final time, because obviously those companies are going public. But also the flip side of it is NVIDIA is trying to get another reason for people to buy a $5 trillion stock, which is, hey, at least, you know, the stability, the volatility of the stock, it's hard to control, but there is something stable here, which is a dividend yield that probably will go up over time, even if growth slows down. Tanner?
Yeah, I think some important things to keep in mind. We're going to get Vera Rubin here, Q3, Q4. Just like last time, gross margins are going to come down. If you take a look at their gross margins over time, at the very first start of production and delivery of Blackwells, this ended up taking a big hit on gross margin percents. Then Jensen Huang told the market that they would re-accelerate back to 75%, and no one believed him. Like, the stock fell on that news, and they said, "Good luck bringing this back to 75%," and here we are. So I think that this is going to, and you literally see it there, Q1, 60.5%. So I appreciate you highlighting that. In Q3, a similar thing is going to happen where gross margins are going to get hit. And then what I hope is that NVIDIA ends up talking about re-acceleration of margins, hopefully to 75% again, or even more. But that the market actually believes him this time. Because I feel like Jensen makes a lot of these very outlandish claims, but then they actually come true. And it seems like the market tests him on all of this commentary every single time, even though he's actually been fairly right in a lot of his predictions. But yeah, just important to keep in mind for next quarter guidance.
But it's crazy because even with the ramp, guidance didn't drop that much, right, Tanner? I think the 60.5 includes, right? I think you mentioned the China hit. But if it wasn't for the China hit, Blackwell ramp at this lowest, I think got to like 70.5. So it was only like a 4.5 percentage point drop. And they were able to bring it back here to the mid 75. I actually don't think we're going to get it to the low 70s this time. I think we're going to get closer to the mid 70s, but it's definitely going to be something that during the ramp we're definitely going to see.
Neil, you are heavier in AMD than Nvidia. Any thoughts about this quarter from an AMD shareholder perspective?
AMD doesn't pay 25 cents dividend per share just yet. No, but I mean, Nvidia is expected to double free cash flow over the next 2 fiscal years to, by fiscal 28, $240 billion in free cash flow. Like Tanner says, like what are they going to do with it? I mean, we've had this conversation, I think, a year ago, okay, they were still investing in a couple of companies here and there, but right now they're like, okay, we are printing too much money, so let's increase the dividend by 24 cents per share. Let's buy back even more shares. Well, allow ourselves to buy back more shares if we can. And even after that, they still have an insane amount of money that they can do whatever they want. If they want to acquire a small company, they'll acquire a small company. If they want to give, I don't know, whoever a little paycheck, they'll give whoever a little paycheck. And it's a very, very good position to be in. Let's say it that way. AMD is still early days. I mean, free cash flow is also expected to grow quite rapidly over the next couple of years, but nowhere near $200 billion in free cash flow. And yeah, I mean, we are all turning into dividend investors, so that's pretty cool.
We're not dividend investors. We're looking to make the most amount of money, and try to increase the total return, every year. Regardless if they do that through buybacks, through dividends, whatever, might have a different tax implication, but it is shareholder return. Like you said, what else are they going to do with this money? This is Apple, circa 2016 to 2018, just like, okay, well, let's ramp up the buyback engine because what else are we going to do? We've won the game. Can I put a stat into your guys' head for a sec? And Amit, I apologize for picking on you, but Nvidia once again grew faster than Palantir, and they're a $5.7 trillion business, and they're growing faster than Palantir. And the PE ratio on a forward basis is going to come down to something like 22 times tomorrow.
Actually, Palantir grew 85% this quarter as well, so they're actually at the same growth rate.
Nope, I just checked. It was 84 versus 85. Bring down the decimals. Go check. I just checked, but they're winning.
This is what I have to deal with, folks.
He said suck it.
But to your point, dude, yeah, this type of growth rate is something we have never seen from a company at this scale. But again, we've been saying that for the past year and a half at this point. Now it's about, can the market accept market capitalization to the extent of what Nvidia should be worth, which I think theoretically, many people think at least $250 a share. How much of a percentage of the S&P would that be? And is the market okay with that in the midst of oil and bond yield spiking? And I feel like that stuff starts to matter more than just the top line numbers right now.
Or the other question is, can Nvidia keep these margins super high for the next 5-10 years plus?
That's also a concern. That is correct. I mean, well, we don't expect Nvidia to go 90% for forever, right? So I guess, Tanner, to push back at your question here, when does growth slow down, and when does the market care about it slowing down? Because I don't know if Palantir can grow 85% the next 5 years either. So I mean, when do you think this thing?
Yeah, when it doesn't slow down? Next quarter. That's what I know. That's as far as I know. I don't know if they'll continue to accelerate at this rate. It's harder and harder to grow at that rate whenever the comps are also higher and higher. But I think that the interesting part and the reason why I feel comfortable taking big bets on Nvidia is that the valuation does not look like a company growing faster than Palantir at extremely high rates. And so the margin of safety is the valuation, which I think tomorrow will be like 35 times trailing PE. something like this. That's the exciting part. So if there are signs of slowing, it's okay. Does it slow down to what rate? Do we slow down to 15% or do we slow down to 30, 40%? Because even that is still, you're greatly beating the S&P 500 over time. The build out, finds its way into individual enterprises are building their own pods, and they actually are making it like their own like what Lily just did.
Yeah, and to your point, Tanner, quite
what was
frankly,
it called? Lily Pod? Yeah. Sorry.
Quite frankly, if anyone here is betting on Micron or ASML, like, you can't be buying those stocks at their valuations if you think Nvidia will substantially slow down growth anytime soon. Because if Nvidia is not growing north of, I don't know, 50, 60%, the memory demand probably is not going to be that aggressive either, given Nvidia is one of the biggest buyers of that. So it's like you would have to imagine they keep up, maybe not for the next 5 years, but to Tanner's point, at least for the next 2 years, maybe not 90%, but it's going to be up there if we're going to give the multiples that we're giving to all these supply chain players that are now, pushing $1 trillion valuation for some of these companies.
Your chat, it loves to troll me so much. I'm seeing a bunch of people like Tanner's in denial in chat because he owns too much Nvidia. Like,
sure, they're
denial
trolling.
about what? It's $220. It's the biggest company in the world. I'm up 66% in the last year. And there's no denial here.
No, the majority of my chat, the majority of retail owns Nvidia. Like we all got this thing. I think now the question is, how long do you hold this thing? And you got the Beth Kindigs of the world saying she said it's going to be a $20 trillion company, but she just sold 75% of her Nvidia. So you've got this looming question of like, how much bigger can it get? And is there an opportunity cost of holding it? But then they put up this type of growth and you're like, oh my goodness. And then they're giving me a better dividend to stay in. Like, they're giving you reasons to just keep staying in the story without looking for the next Nvidia.
They trade. That firm trades. They trade a lot. And mind you, they've called it right, because I remember they were like selling Nvidia like 120 to like 140 bucks, and they bought it back at like 90, which I guess that's good, right? But like, that's a lot of taxes right there. So, but don't get me wrong, like the research that Beth Kindig puts out with her firm is really good. I read their stuff. It's good.
Wow. Wall Street Journal, Anthropic expects a 130% revenue surge to 10.9 billion in just June, and its first operating profit for Q1 of this year.
Yeah.
Where's Google?
Their gross margin has just skyrocketed. In January, they showed off gross margin at 38%. And then in April, it was 70%. So the demand is so much outstripping their supply, and they're going to be such a massive winner. And luckily, OpenAI might end up IPOing before them, because if they didn't, there might not be any demand for OpenAI at all, because Anthropic is the clear winner for enterprise. And enterprise is the ones that I can actually afford to pay for AI. I don't think consumer is nearly as exciting as enterprise.
A number I feel we haven't talked much about during about this earnings is the commitments. They raised it to about 120 billion. Last quarter was 91 billion. So, like Commit mentioned, right? If you're excited about a lot of these beta names in the semiconductor industry or the AI trade, it's because Nvidia is making those $5 billion purchase orders on you for the next few quarters, the next few years. So there is no Nvidia story. There's not going to be a story for you either. So I think that's what gets me excited about just learning, even if one doesn't own Nvidia, seeing where the market is moving and what kind of growth opportunities they're seeing can kind of give a lot of insight about everything else. Now, we also kind of had a little bit of a discussion there on these upcoming quarters are going to be kind of hard comps for these year-over-year growth. But I do believe last year was also a hard comp compared to the previous year. And it's just this company continues to get bigger. But at the same time, even with the harder comps, we're still seeing that strong double digit. I mean, 90 is crazy. But even if we were at 60% year-over-year growth and still having a forward PE ratio of 25, I do think the market does have some fear of like, is this the biggest it can grow? And it just, for the past 2 years already, it says that nope, we can actually keep going faster and harder. And yeah.
Can we watch the Gavin Baker commentary? I don't know if you saw that clip going around.
I know exactly what clip you're talking about. Yeah, I'll pull
That's
it up.
an amazing clip talking about how if Jensen wanted to sell $2 trillion worth of chips, they would sell, but that would create the bubble. And I'll let Gavin tell it.
Every prior market precedent for a foundational new technology like AI, you've always had a bubble. That bubble funds the build out of this new technology, but supply gets ahead of demand and you get a crash, and it's a particularly severe crash if it's a debt fueled build out like the year 2000. And one thing really good about the current build out is it's still overwhelmingly funded out of operating cash flows, which is a really important fundamental difference versus the year 2000. Has is valuation, has is the fact that every GPU is running at 100% utilization when 99% of fiber was unutilized. So there's all these fundamental differences, but history doesn't repeat, but it rhymes, and we should expect a bubble. And I have been optimistic that this fundamental shortage of wafers, which really today is controlled by Taiwan Semi, will prevent one. If Taiwan Semi did what Jensen wanted, I think Nvidia could sell $2 trillion of GPUs in 26 or 27, maybe 2.5 trillion, maybe 3 trillion. But there is a limit where consumers would consume so much that you probably would be in an overbuild. And so Taiwan Semi, if we don't get a bubble, like we need to have like a giant party in Taiwan because they will have single-handedly prevented a bubble, okay? But even here, you are starting to see companies go to Intel and Samsung. So, like, I think a lot of this may come down to the degree to which Taiwan Semi can maintain a lead over Intel and Samsung, you know, the pace at which they expand capacity. Like if I were to watch one thing to understand whether there's a bubble, it's Taiwan Semi's capacity decisions. And I think there's a Goldilocks zone where they expand enough, they make it hard for Intel or Samsung to really truly emerge as like a at scale second source. And yet they also keep this fundamental constraint on wafers that, you know, helps us avoid a bubble.
Tanner, before you give your take, the SpaceX S1, which is the document you filed before you go public, just came out. I'm throwing it into ChatGPT right now. I'll try to get everyone the juiciest numbers. That wow, SpaceX owns 18,000 Bitcoin at a cost basis of 35,000.
Very cool. Very cool.
We're about to get a lot of stats. But Tanner, your take on what he just said around how a bubble could happen.
Well, I think that it's just very interesting. If I think if TSM was not in the on the Taiwan island, it would be the biggest company in the world. I mean, a lot of people talk about Nvidia being the kingmaker, but the company really setting the precedent right now is TSMC. But because there is a wafer capacity shortage, and that is one of the biggest bottlenecks, they are potentially hampering NVIDIA's growth. And that's actually stopping us from seeing this massive rise up in growth to then plummet back down because people actually do like supply is being met by demand rather than it being so demand heavy. So because there is a shortage, companies like Anthropic can make much higher margins and charge much more because the enterprises are willing to pay any price. It's actually quite healthy that we have some of these supply demand imbalances because it hampers growth and allows, us to not accelerate into growth and then only to plummet down afterwards and have a pricing war to zero across all the other, model makers.
And one thing, I mean, I've definitely come to a mid channel a few times, and in my overall channel, that's one of the biggest things that I feel like there's not an AI bubble. I've said numerous times that the shortage in all this is creating the ability for us to not overspend. A quick point that yesterday or 2 days ago, STX Seagate was actually at a conference, and they kind of talked about why this is a different bubble compared to previously. And they mentioned one of the biggest reasons is in the storage and memory space. In previous bubbles, you were just selling volume, but the actual drive utilization rate was nowhere near 100. Right now, every drive that they sell in the data centers, they're running at full capacity. This is not something that has been seen in the past. So every drive, every memory, every solution that's being sold is being worth like no tomorrow. And that's a big difference where previously everybody was buying for potential demand. This cycle, we're buying to the current demand. In the current demand, we're all running at that 100% utilization rate.
The fact that we're even talking, though, about what's preventing the bubble means that we're getting to the point of the cycle where people are worried genuinely of if this is going to get too big. And Gavin Baker, I agree with you, has a really sophisticated argument.
Hold on. We've been worried for years. The bubble talk started in 2022.
No, but that talk was just like that talk was.
It hasn't changed.
Well, no, I disagree. Well, Nvidia wasn't a $5 trillion company. Like now, and you're seeing the stock in 2023. Every quarter, Nvidia was up 20% the next day, literally for 7 quarters in a row. Like
Nvidia's valuation is cheaper than.
No, I'm not disagreeing on that. My point is that the public conversation is starting to become: does Micron deserve to be a $900 billion company? Does Nvidia deserve to be a $7 trillion company? Does TSMC deserve to be a $4 trillion? And everyone can assume valuation-wise, yes, that should happen. But then the question is like, will we let it happen? Which is why Gavin Baker is even making the argument that thanks to TSMC, we don't have a bubble. Jonathan Ross today was at a conference. He was the co-founder of Grok that Nvidia acquired. And his argument, I mean, it was very subtle, but he was just like, you guys better start building more. He was basically telling the memory makers, he was like, I hope you're watching because you guys should be making more memory fabs. Because if you're not, we will out innovate and have a less dependency on memory.
Yeah.
Which then begs the question. It's like, okay, yes, we still have all this massive demand for memory, but you have one of the smartest guys in the world, the co-founder of the TPU at Google, saying, hey, this memory thing, it's a big part of our supply chain, but Jevons paradox doesn't work here because we'll just out innovate to make. So you got more people thinking about this. And then Nvidia increasing their dividend from 1 cent to 25 cents. You've also got people thinking, okay, it's becoming a little bit more of a mature business. And I think that's realistically why you're seeing the stock basically be flat after hours.
But the question is again, are we in a bubble? What is showing us that we are in a bubble? Just because these companies are becoming bigger, they are becoming bigger because they sell out every single quarter. They sell out everything they can sell. They sell out. So it's not. I mean, he said it. If there was way more supply than demand, then okay, we are in the bubble territory. But we are clearly far away from this. And again, it's not me or anyone here saying that there aren't overvalued companies in the market. They are definitely overvalued companies in the market. There are companies that are absolute trash, but the big players, the big winners here are nowhere near bubble territory because they make so much money. Everybody's making so much money right now. Everything's selling out super fast. Margins are very high. Okay, eventually, especially since memory is becoming a bottleneck, yes, I do think that every company is going to work quite hard on the software side of things to make sure that they will probably depend a bit less on buying so much from the memory players. And that's probably why you're never going to see a super high premium or multiple on Micron or SK Hynix, because you are going to see these companies, the Googles, the Nvidias, etc., work on the software side to make sure that they can utilize 110% of the memory that they're buying and are going to buy in the future.
Yeah, Meta trading at 18 times forward is not a bubble. Nvidia 25 times forward is not a bubble. The broader question, I think, in terms of the stock, which is what we're all taking a look at here, is how big can it get? Because if Nvidia was $350 today, you could theoretically justify it, but I think people would feel like, okay, it's happening too quick, especially when you have oil above 100, the 10, like you have all these macro concerns around how stocks keep going up, semis keep going up. There's all these other broader issues, but then the actual multiples on these names, as you said, Neil, they're not bubblish. Microsoft's not Google at 28 times is just, Cisco was at 120 times in the .com bubble. So the earnings growth is there. I guess now the question is, will the premium be baked into the stock price even further than what we've got, given Nvidia is up like 1,000% over the past 5 years? And they're just going to have to keep executing, which they did this quarter, 100%. But, like every quarter, it's just not fully being priced in yet. SpaceX, some stats here that I think are kind of crazy. They did 18.7 billion of revenue 2025. They did 20.7 billion in CapEx. So They absolutely were not profitable. They lost $6.35 billion in their AI segment business. They lost $1.23 billion of adjusted EBITDA. They have 35,000 or 18,000 Bitcoin at 35,000 cost basis. A lot of this AI segment capex is probably because of their acquisition from XAI. And yeah, overall 18.7 billion so far. I'll try to get some more stats, but I mean, going back to the bubble conversation, this is the company that's spending 20 billion on capex, 18 billion in revenue, going to IPO at 2 trillion. Liquidity's got to come from, maybe people are going to have to sell their Nvidia to buy the SpaceX IPO. And how big is that SpaceX IPO going to become? And can we sustain that type of evaluation and earnings multiple on something that's not growing like Nvidia is?
Aren't they only going public with $75 billion?
Yeah, they're raising 75 billion.
I mean, that's not a lot.
Well, at the valuation that they're raising at.
Yeah, they're
to get $75 billion of capital around the world to say, yes, I want to buy this at 2 trillion.
That wouldn't break the market. I look at Cerebras. That was egregious, and the market didn't crash.
Well, that's a $70 billion company. That's not even this market.
That's true. I think people would buy it up. I think, well, Kathy Wood would buy it. That's for damn sure. She will buy that thing on day one.
Yeah, I don't think any of us here think we're in a bubble. I think all of us are pretty logical around the numbers around it. I think most of the chat probably doesn't think we're in a bubble. But once again, the stock is not reacting. And I think we're trying to rationalize why it's not reacting. And it's not about us being in a bubble. It's about how much premium is the market ready to price in. Because theoretically, it should be 250, 260. I think most people would agree with that.
The call starts
where do you think it's going to? Sorry, I was going to say, where do you think it's going to go based on earnings, on the actual earnings call?
I don't know, dude. I mean,
do you think we go higher or lower from here?
I'm not sure what the question would be that the street would react to that would get them upset or happy. All the numbers are there. Jensen tends to be very nonchalant in these. I mean, last time he went totally off script and kind of went on a rant for like 15 minutes. I don't know. I feel like the street needed to see something even crazier than what they saw. Really, tomorrow we'll see what the price action looks like, but I don't know what the street needs to see because they just destroyed the quarter. But it's like, I guess we already knew they were going to destroy it, and it's just not enough.
I think Vera Rubin's going to be a very interesting development because it's going to be a lot of diversification. Well, people can look at Nvidia and say, oh, they're selling chips. The type of chips that they will be selling now, Vera standalone, Grok, Rubin, these have different use cases, and it actually adds new customers onto their list of buyers. It adds diversified revenue. I'm really interested to see what the back half of 2026 looks and the early half or first half of 2027 looks like for Nvidia, because it could be a very different Nvidia, and probably why they're changing the reporting standard as well.
I am curious about that, how they're going to report and how Jensen communicates why we need to report in a certain way. I think, when Jensen had that comment that you can't hold the stock back, it was trading at 180. Now it's at 220. So I don't think he's going to be that pissed like he was last quarter, because last quarter I think he felt like, the market really wasn't giving them any respect. 220 is a big difference from 180, but obviously if he thinks the stock should be probably closer to 250, which most analysts do as well, then, maybe we get a angrier Jensen trying to tell the street guys, like, it's happening. It really is happening.
I think the fact that they have a whole thing on edge computing is like so bullish for pretty much anything to do with edge computing. So like with Cloudflare, DigitalOcean. I do think that this is actually really good. So when they say that they're going to do two, does that mean like they're going to have two different earnings every quarter? Is that what?
No, it's just they're not going to report automotive, data center, all that stuff.
Oh, my bad. Okay.
Because it's just going to be reported a different way.
Not even gaming or? Oh, go ahead. Sorry.
That'll be under data center for the new version of it. All right, calls live. Here we go. We'll be back in an hour, and we'll analyze what we heard.
Good luck, everyone.
Harry, you may begin your conference.
Thank you, and good afternoon, everyone.
Welcome to NVIDIA's conference call for the first quarter of fiscal 2027. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 20th, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered an exceptional quarter with revenue, operating income, and free cash flow exceeding our prior records. Total revenue of $82 billion was up 85% year-over-year and 20% sequentially. This marked our third consecutive quarter of year-over-year acceleration and the 14th straight quarter of sequential growth. A significant feat given the sheer size and complexity of our manufacturing operations. The $13.5 billion sequential revenue increase was also a record. We capitalized on the inflection in inference demand by ramping Blackwell systems across our diverse end customer base, from hyperscalers to model makers to AI cloud providers and sovereign customers. In Q1, we also allocated capital effectively across R&D, investments in our ecosystem, and share repurchases. We returned a record $20 billion to our shareholders while executing strategic investments, both upstream supply chain and downstream go-to-market ecosystem. This is critical to the market's development and our long-term position. Data center revenue of $75 billion was up 92% year-over-year and 21% sequentially, driven by sustained strength in our Blackwell architecture. And demand for GB300 and NVL72 was particularly strong, with frontier model builders and hyperscalers each having cumulatively deployed hundreds and thousands of Blackwell GPUs, marking the fastest product ramp in our company's history. Grace Blackwell is the fastest training system as well as the lowest token generation cost at inference. Spectrum-X, our end-to-end Ethernet platform purpose-built for AI, is now larger than all Ethernet network peers combined. InfiniBand has also had a very strong quarter, growing more than 4x year-over-year, driven by deployments of our next-generation XDR technology. For your models, data center computing revenue of $60 billion was up 77% year-over-year, while data center networking revenue of $15 billion nearly tripled year-over-year. Before we deep dive into data center, we'd like to brief you on our transition to a new reporting framework that better reflects our current and future growth drivers. We have two market platforms, data center and edge computing. Within data center, we will report two submarkets, hyperscale and ACIE, which incorporates AI clouds, industrial, and enterprise. Hyperscale will include revenue from the public cloud and the world's largest consumer internet companies, while ACIE addresses our growth opportunities in diverse AI purpose-built data centers and AI factories across industries and countries. Edge computing highlights devices for agentic and physical AI, including PCs, gaming consoles, workstations, AI RAN base stations, robotics, and automotive. For your reference, we have posted on our website a revenue breakdown based on our new platforms for the past 9 quarters. Moving back to our data center results. Hyperscale revenue of $38 billion was approximately 50% of data center revenue and increased 12% quarter over quarter. ACIE revenue was $37 billion and grew 31% quarter over quarter, including AI cloud revenue that more than tripled year over year. Our customers have enabled rapid stand-up of AI compute capacity. The number of partner data centers exceeding 10 megawatts has nearly doubled in just 1 year, now surpassing 80 sites. Sovereign revenue increased more than 80% year over year. Nvidia AI infrastructure is now deployed across nearly 40 countries, representing 50 trillion in GDP. As evident to our Q1 results, our customer base is diverse and growing, supported by our vast ecosystem and installed base, breadth of CUDA accelerated application, and the lowest token cost provider. We are well positioned to address a market opportunity that far exceeds that of any other AI computing platform. Demand for AI infrastructure continues to expand at an unprecedented pace. The build-out of AI factories is accelerating. The value of Nvidia AI infrastructure is rising. The price of renting an H100 has risen 20% year to date, while A100 cloud pricing is up nearly 15%. Benefiting from the versatility of our platform and continuous performance enhancements enhanced by our software stack, customers are generating profitable revenue beyond the depreciable life of their GPUs. The vast and trusted marketplace for NVIDIA compute is a critical foundation on which billions in AI infrastructure spending is being financed by the ecosystem. There are 2 primary drivers behind the accelerating build-out of AI infrastructure. First, from search and advertising to recommender systems and content understanding. The largest hyperscale workloads continue to transition from CPU to GPU-based accelerating computing. Second, the adoption of products and services native to AI is inflecting. Since the advent of ChatGPT, we have witnessed mainstream AI transition from one-shot inference to reasoning and to now agentic. AI is no longer a nice to have. AI is now a necessity for enhancing productivity across all industries and roles. This is propelling revenue acceleration across all layers of the AI cake, including energy, chips, infrastructure, models, and applications. Growth in the model layer, particularly at Anthropic and OpenAI, has been incredible, with momentum continuing to accelerate, including breakout growth in OpenAI's Codex since the launch of GPT 5.5. With analysts now forecasting hyperscale capex to exceed $1 trillion in 2027 and agentic AI beginning to proliferate all industries, AI infrastructure spending is on track to reach $3 to $4 trillion annually by the end of this decade. Our Blackwell architecture is everywhere, adopted and deployed by every major hyperscaler, every cloud provider, and every major model maker. Last month, we celebrated OpenAI's launch of GPT 5.5, co-designed for, trained with, and served on Blackwell, currently positioned at the top of artificial analysis leaderboards. Microsoft's Fairwater, the world's most powerful AI data center, is now live, ahead of schedule, powered by hundreds of thousands of Blackwell GPUs. Starting this year, AWS will add more than 1 million Blackwell and Rubin GPUs and are collaborating on Spectrum networking. At Google, Blackwell will be offered to customers in the cloud, including confidential computing capability, a new foundation for secure, high-performance AI. Our share of frontier AI compute is increasing. We have deepened our collaboration with Anthropic and are delighted to be a strategic partner to expand their compute capacity. We will support the company's growth trajectory through AWS, Azure, CoreWeave, SpaceX AI, and more. Now, with the addition of Anthropic to OpenAI, Gemini, SpaceX XAI, Meta, MSL, Microsoft AI, TML, Reflection, Perplexity, Cursor, and other major frontier labs already building on NVIDIA, our share of frontier AI models will grow significantly. Today's data centers are revenue-generating AI factories. Constrained by power and capital, AI factory operators must choose the right architecture. With our extreme co-design approach, we deliver the industry's lowest token cost, the highest token throughput, and the highest ROI. MLPerf inference results are in, and once again, we swept every benchmark as Blackwell Ultra delivered the highest throughput across the broad set of models and deployment scenarios. Full stack innovations drove the 2.7x increase in throughput and a 60% reduction in the cost per token on GB300 compared to just 6 months ago. NVIDIA Compute is not just the highest performance AI infrastructure, it is the most economic and financeable. Customers do not buy GPUs, they build AI factories. And the right economic metric is not the purchase price of the GPU, it is the lifetime cost of an AI factory producing intelligence, token per watt, tokens per dollar, uptime, utilization, time to production, software durability, and asset life. NVIDIA excels at all of them. Agentic AI and reinforcement learning represents new growth opportunities for CPUs. Building on the success of our Grace CPU, Vera is arriving just in time to meet this inflection. Built on custom ARM cores and co-designed end-to-end with Rubin GPUs and NVLink, Vera will deliver up to 1.5x faster performance per core, 2x performance per watt, and 4x density per rack compared to x86-based alternatives. Vera CPU opens a brand new 200 billion TAM for NVIDIA, a market we have never addressed before. And every major hyperscale and system maker is partnering with us to get it deployed. We have visibility to nearly $20 billion in total CPU revenue this year, setting us up to become the world-leading CPU supplier. Our annual product cadence, a pace that is unmatched, remains a key pillar supporting our market position. We are on track to commence production shipments of Vera Rubin in the second half of this year, starting in Q3. By integrating 7 purpose-built chips across 5 accelerated racks, Vera Rubin will deliver up to 35x higher inference throughput and up to 10x greater AI factory revenue compared with Blackwell. As an early adopter, Google's A5X bare metal instances, which can support up to 960,000 Rubin GPUs across multiple sites, can enable customers to run their largest AI workloads on NVIDIA's optimized infrastructure. While the US government has approved licenses for H200 to be shipped to China-based customers, we have yet to generate any revenue, and we are uncertain whether any imports will be allowed into the country. As a result, consistent with last quarter, we are not including any China data center compute revenue in our outlook. Let me move to edge computing. Our edge computing market platform generated $6.4 billion, up 10% quarter over quarter, and 29% year over year. Robust Blackwell workstation demand was a strong contributor to the growth, while consumer demand fell modestly due to higher memory and system prices. Our physical AI continues to gain momentum, exceeding $9 billion in revenue over the last 12 months. Our partnership with Uber will power their robotaxi fleet across nearly 30 cities and 4 continents by 2028. And in robotics, leading companies across a range of industrial, surgical, and humanoid applications are building on Nvidia's technology to develop and deploy at scale. We remain front-footed in securing sufficient supply to support our customers' growth. In Q1, we increased total supply, inclusive of inventory, purchase commitments, and prepaids to $145 billion. While we are not immune to supply challenges, we remain confident in our ability to support the growth opportunity ahead. With our intense focus, scale, and longstanding partnerships with critical suppliers continuing to serve us well. Let me move to the rest of the P&L. GAAP gross margin was 74.9%, and non-GAAP gross margins was 75%, largely flat sequentially by Blackwell systems continued to account for most of our shipments. GAAP and non-GAAP operating expenses were up 12% sequentially, primarily due to higher compensation and an increase in compute and infrastructure costs. Our non-GAAP effective tax rate of 16% came just below our prior outlook due to favorable geographic mix. And on our balance sheet, days sales outstanding was 45 days due to favorable timing of collections. We expect to return to the mid-50s in Q2. We generated record free cash flow, $49 billion, up from $35 billion in Q4. I'd now like to update you on our capital allocation plan. First, to reiterate, our intention is to prioritize R&D and strategic investment. Both will enable us to cultivate our ecosystem, drive market growth, and strengthen our market position. As a key enabler of AI, we will make investments necessary to deliver the industry's lowest cost per token and the highest token throughput, which will help our customers and partners scale and expand the AI frontier. Return program is another key component of our capital allocation strategy. Given confidence in our long-term free cash flow outlook and our commitment to sharing our success with shareholders, we are increasing our quarterly dividend from 1 cent to 20 cents per share. We plan to review our dividend on a regular basis as we continue to scale our business. We are also announcing an $80 billion share repurchase authorization, which is in addition to the $39 billion remaining on our current plan. As we indicated at GTC, we plan to return roughly 50% of free cash flow to shareholders this year. Let me turn to the outlook for the second quarter. Total revenue is expected to be $91 billion, plus or minus 2%. We expect sequential growth to be driven primarily by data center. We are continuing to work vigorously on our supply chain ecosystem to address the incredible demand we see ahead of us, giving us full confidence in the $1 trillion in Blackwell and Rubin revenue we foresee from 2025 through calendar 2027. GAAP and non-GAAP gross margins are expected to be 74.9% and 75% respectively, plus or minus 50 basis points. For the full year, we are still expecting to be in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $8.5 billion and $8.3 billion, respectively. For the full year, we now expect OpEx growth to grow somewhere in the upper 40s on a year-over-year basis, driven by higher R&D and acceleration in the usage of AI tools to enhance productivity. For the full year 2027, we expect GAAP and non-GAAP tax rates to be between 16% and 18%, excluding any discrete items from material changes to our tax environment. This is lower than our prior expectation of 17 to 19 due to changes in geographic mix. That puts me at the end of this part, and I'm going to now turn this over to the Q&A with Toshio.
Thanks, Colette. We will now transition to Q&A. Operator, please poll for questions.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Thank you.
All right, Q&A, here we go.
Your first question comes from Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you for letting me ask a question. I guess I'd like to ask, what drove the change in segmentation? What's the philosophy behind giving us the numbers that way? And then can you talk about any competitive differences between the 2 segments and this kind of surprising CPU number that you talked about? How do you see that across the 2 segments as well? Thank you.
Yeah, thanks, Joe. First of all, Colette meant to say we're increasing our quarterly dividends from 1 cent to 25 cents. I think that extra 5 cents would mean a lot to the large shareholders. So anyhow, let's see, Joe, on the segmentation and the description of the business, we wanted you to understand our business better. AI is very diverse, and computing is diverse. They're diverse in several ways. The first thing, of course, is AI includes languages, and depending on the different industries, it could be 3D graphics for manufacturing and industrial robotics. It could be proteins for life sciences. It could be small chemicals for life sciences or material sciences. It could be physics for the physical sciences, whether it's in the energy sector or, of course, the science labs, higher education, so on and so forth. So AI is diverse. The second thing is the applications are diverse. It could be in enterprise. It could be in the energy sector, manufacturing sector, and such. Where it runs is diverse. It could be in the hyperscale cloud. It could be AI natives. These a whole network of AI natives that are cropping up around the world. Enterprises on-prem, industrial in the factories, in the plants, all the way to supercomputing centers and the edge. Edge including, of course, what most people see, self-driving cars, robotics, but a large growing network of computers inside manufacturing plants, whether it's a chip plant or packaging or computer plants, all kinds of different types of manufacturing plants. And then, of course, in the future, every single base station, every single radio network would become an AI-powered radio network. And so where it runs. And then lastly, how it's governed. It could be operated by a public cloud, but it could also have regular industrial regulatory reasons that prevents it from being run in a regulatory cloud. It could be because of confidential computing. It could be because of national security reasons. Different data centers have to be built differently. NVIDIA is quite unique in the sense that we are the only company that builds all of the technology components. We build it in an extreme co-design way, in a complete end-to-end way, and a full stack way. But then we, of course, open the platform so that it could be integrated into all the different environments. But some environments just require, an enterprise, for example, require a company who has all of the technologies working together so that they don't have to build it. They would like to buy it and operate it. And so there's many different segments of the data center market where NVIDIA's total solution, fully integrated solution with full stack, but still open, that way of producing or delivering products is really, really important. And so if you look at our different segments, the way we broke it out into 3 large segments, you take all of the words that I just said, and you try to find the simplest factoring of it. It would be the hyperscale clouds. That would be one large segment. And within that segment, there's 3 different ways that we operate. First way is that we help the hyperscale clouds accelerate their data processing and machine learning workloads. We accelerate and support their AI processing inside. We also, of course, bring a lot of business, NVIDIA ecosystem business to their public clouds. And so that's one segment. The second segment is AI natives, enterprise on-prems, industrial on-prems, and sovereign AI. That segment is growing incredibly fast because everybody needs AI, and we're going to see AI being adopted by every industry, every country, every company. And so everybody wants to build it in a different way. And the fact that we provide the entire solution, it makes it much easier, makes it possible at all for people to be able to build these things. And then, of course, the robotic edge. Yesterday's computing was largely about personal computing. In the future, it's going to be about personal AI. And that personal AI, one example of it is the self-driving car. It's a robotic system that's essentially your personal AI. And of course, there'll be all kinds of different types of robotic systems, including even the base station radio network, as I mentioned, is going to be essentially a robotic system. So that's the reason why we broke it all apart this way. It's the simplest way of understanding our business. Each one of them have different stacks in a lot of ways. They have different operating systems. They operate in a different way. We go to market very differently in each one of them. The easiest go to market, of course, is the hyperscaler because there are only 5 or 6 of them. But the rest of them, the rest of the industry represents a couple of 250,000 companies around the world. That go to market is very complex, very diverse. Your understanding of AI has to be extremely diverse. And as you know, NVIDIA has the largest suite of acceleration libraries in the world, from computational lithography to fluid dynamics to particle physics to molecular dynamics to the list goes on. And all of those libraries are essential for us to engage the vertical industries that represents the second and the third category. Okay, so anyways, it's really about the fact that our business has now evolved and grown to such a large scale. It's helpful to segment it so that you have a better understanding of how our business works.
Your next question comes from Ben Reitzes with Melius Research. Your line is open.
Hey guys, thanks so much. I wanted to ask Jensen, I want to ask you about your philosophy on growth. Your data center business ex-China grew about 120% in the quarter, and then you're guiding about 100. CapEx at the hyperscalers is forecast by many, including myself, to grow 90 to 100% this year. And you talked about data center, still on track to be 3 to 4 trillion by the end of the decade. I was just wondering, is the goal for the company to grow faster than hyperscaler CapEx? Are you comfortable in kind of endorsing that view? And do you still see hyperscaler CapEx kind of still growing after this year at a very rapid clip? Thanks a lot.
Yeah, thanks, Ben. So first of all, we should be growing faster than hyperscale CapEx. And the reason for that is illustrated by the segmentation that I just described. Our data center business has 2 large parts. It has more parts than that, but we combined it into 2 large parts for simplicity's sake. It's much more complex than the 2 large parts, but I combined it into 2 so that it's at least easier to understand. Okay, and so if you look at the first part is hyperscalers. That's the hyperscale CapEx that you were just talking about. And there are $1 trillion this year. I have every expectation it's going to grow from here for fundamentally good reasons. This is the way computing is going to work in the future. And if they don't have the compute, they won't have the revenues. It is very clear. Compute is revenues. Compute is profit. And so the world is changing. Software didn't used to use SaaS, it didn't used to use as much compute, but AI requires a tremendous amount of compute. But you could do, of course, incredibly more, which is the reason why we heard about the AI frontier AI companies, both Anthropic and OpenAI, growing at an incredible pace. The fact that they can grow within 1 month what some of the SaaS companies would have taken a decade to grow, tells you something. And so the first category is hyperscale, and the CapEx is at $1 trillion, and it's growing towards the 3 to 4. The second category is all of the AI native clouds. They're regional. They're all over the place. There are startups all over the world supporting those companies. They're enterprise, 250,000 enterprise companies around the world. Many of them will have to build or want to build AI factories for themselves to operate. Many industrial companies, there's no choice but to put the computer where the context is, where the action is. You can't put that in the cloud. It has to respond reliably, quickly, every single time. Can't imagine, a chip plant, a chip fab being connected to a cloud service provider. Doesn't make any sense. And so the second category, and then sovereign AI clouds. And so there's a whole category of data centers that semi-custom chips just don't apply, because these data centers want to buy systems, they want to operate systems, they don't want to design, they don't want to build it themselves. And so the second category is extremely diverse. Instead of 5 or 6, 7 companies representing the revenues associated with our first category, the second category is hundreds, thousands of companies, and in the future it'll be hundreds of thousands of companies with a large number of companies with smaller installations. And that category is going to continue to grow at incredible pace. This second category, when I talk about physical AI and I talk about how the rest of the $100 trillion industry that has not been impacted by IT in the last 30 years, it's about to be impacted by AI. That is the segment that I'm talking about. The second cluster is growing incredibly fast. Our share of that, of course, is very, very large. We're fairly unique in our ability to be able to serve this industry. Our platform is built like it's vertically integrated so that everything works. But then we disassemble it so that people can build and buy it in the configuration they want and assemble it the way they like. And so this second category is fairly poorly understood because there are just so many small companies or so many companies, and each one of the installations are relatively small compared to, of course, one of the hyperscalers. And so if you look at the segmentation and the size of each, you could see that, in fact, we're growing share in the hyperscalers because we now have much bigger support from Anthropic, a new partner of ours, and we're helping them expand their capacity greatly in the coming years. And then the second, very few companies have exposure into the second category because of the platform solution that we have.
Your next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. You have Vera Rubin coming soon, and you obviously have great insight into coming updates to frontier models and new techniques to optimize around diverse AI workloads. With investors keenly focused on your market share and inference, how do you see Vera Rubin and your extreme cove engineering impacting your share of the inference market, as we look into late 26, 27?
Well, we are growing share in inference, and we're growing share in inference very, very quickly. And the reason for that is this year, the number of frontier model companies grew. And so there's Cursor and Perplexity, and there's some new model companies, TML and Reflection, and the list goes on. And so the number of frontier model companies has grown. And we added Anthropic to our partnership this year. They're expanding incredibly fast. We've partnered with them to secure computing capacity across Azure, AWS, CoreWeave, I forget who else we've already announced, but there's a whole list of others that we are bringing online for them. And so the amount of capacity that we're going to bring online for Anthropic this year and next year is going to be quite significant, very significant. And so we're growing, and our coverage of Anthropic has been largely zero until just recently. And so we're gaining share tremendously fast in inference. Vera Rubin is going to be even more successful than Grace Blackwell at this point. Every single, I can't think of one, every single frontier model company will jump on Vera Rubin from the get-go. And that wasn't true before on Blackwell. And so Vera Rubin is off to a tremendous start, and it'll surely be more successful than even Grace Blackwell. So I think the end of your answer, CJ, is that we're gaining share in inference. Let me go back again to the question that Ben was asking. Remember, so far, everything that I've just explained in the inference question is really focused on hyperscale. Remember, there's a whole second category of AI data centers that we serve almost uniquely. This segment is very fragmented, requires a really well integrated platform solution, and a very large go-to-market. And that segment, all of the inference, 100% of that, the vast majority of that, is Nvidia. And then, of course, physical AI. Nvidia is practically the only company serving physical AI today, and we've been working on physical AI for a long time, and so that is also growing. So our share of inference is growing very quickly.
Your next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask about the traction you're getting with some of these custom merchant things you're doing, stuff like CPX and LPX. And I just wanted to ask and see sort of, you've talked before about fast instance being, I think, 20% of the market. So I would imagine you're getting pretty good traction with LPX. So can you just talk about that and maybe, also how that fits into your broader platform strategy? Thanks.
The LPX is designed for low latency and high token rate, but its throughput is low. Its model size capacity is low, and its context processing, its ability to absorb a lot of context, for example, for software coding, for agentic workloads, its ability to absorb a great deal of context is lower. And so the challenge is simply, and I've explained before that the use case for LPX is not broad. It's intended for somebody who has a fairly large portfolio of different types of token services, and for the high token rate, maybe these services are quite premium. And the number of customers is not significant, but the token rate is very high. And so that remains exactly consistent with what I've said before, and I still expect that. And so I expect that LPX and other SRAM-based decode focused token, high token rate generated focused accelerators will be a niche product for some time to come. As you know, Grace Blackwell and Vera Rubin, we support the entire life cycle of AI, from the data processing, preparing for training, data processing, to pre-training, to post-training, reinforcement learning, all the way to inference. Grace Blackwell is the best platform in the world to do all of that. And if in certain circumstances, so long as the customer, the provider already has a high token rate service that they can offer, then we can tack on an LPX, and they could deliver that service even better. And so that's how I see the market. And I think whether it's 20% or 10% just depends on where we are in the development of AI. I think today it's a lot less than 20%. Someday these premium tokens could be 20%. And I'm, we're ready to work with service providers to enable this capability. I'm excited about it.
Your next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. Jensen, there's a lot of excitement around CPU for agentic applications and just a lot of noise around the number of CPUs actually exceeding the number of GPUs. And I was just hoping that you could kind of, give your perspective that, first of all, is this an incremental workload? Is this kind of cannibalizing what the GPU would have done otherwise? And then secondly, the 20 billion number that you gave, is that for standalone Vera CPUs, or is that kind of already included in that Vera as part of Vera Rubin? So just if you could educate us on the role of CPU versus GPU. Is it cannibalistic? Is it incremental? And then the 20 billion number, how to kind of put that in context with what you sell, right? Which is usually the CPU as part of the GPU. Thank you.
The 20 billion is for a standalone CPU, and remember, we have Vera is used in 3 ways as a standalone CPU, 4 ways. Let me just start with the one that you already know. The first way is Vera Rubin, and we'll sell millions of Rubins, and every 2 of them is connected to a Vera. And of course, we price those too, and they're properly priced. And so that's number 1 use case. The second use case is Vera standalone CPU. The third is Vera with CX9 and the software stack for storage. And then Vera with CX9 with a software stack for security and compute isolation and confidential computing. Okay, so each one of those use cases is built on Vera, and my sense is that we'll be supply constrained throughout the entire life of Vera Rubin. There are 4 different use cases of it, and but anyhow, the answer to your question is of the 20 billion is a standalone. With respect to CPU use, an agent is essentially what people call a harness. The agent has a harness that does and the harness could be OpenClaw, it could be Hermes. Claude Code is essentially a harness around Claude, around the Opus model. OpenAI's Codex is a harness around the GPT 5.5 model. And so these are harnesses, and these harnesses provide for things like I/O, orchestration, memory management, tool use connected to tools, for example, browsers and things like that, C compilers, Python compilers. And so the harness runs on CPU, and the tool use runs on CPUs. So for example, if the AI were to do a search or do a browser, use a browser, that would run on the CPU. The world has a billion users, human users. My sense is that the world is going to have billions of agents. Not today. I mean, we're going to grow into it, but it will have billions of agents, and those billions of agents will all use tools, and those tools are going to be like PCs, just like us humans using PCs today. In the future, you'll have an agent using PC. And so if you kind of think along the lines of in the future, you pick your favorite number of agents at the moment, call it a few 100,000, but in the future, call it, eventually a few billion. I could imagine them all using effectively having PCs that they can all use. And but the large language, every one of those agents are going to spin off sub-agents, and every time they spin these off, you're going to need to do inference. That's where the thinking happens. All of the thinking happens on GPUs. All of the orchestration essentially runs on CPUs. and the sub-agents, when they're spun off, when they're thinking, they use GPUs. Whenever the agents use simulators, those can run on CPUs or GPUs, which is the reason why we're working so closely with Cadence and Synopsys and to accelerate all of the world's tools. We're accelerating all of the world's tools and data processing engines and database engines because agents use these tools and they have lower patience tolerance than humans, and they want things to happen quickly. And so we're accelerating all of the world's tools so that it runs on CUDA. And you could see us doing that, when I work with Cadence and Synopsys and Siemens and companies and Adobe, and that's because we're trying to get all of the world's tools to run on GPUs because they already have GPUs and it's a lot faster. So we're going to need a lot more CPUs, and Vera was designed to be an agentic CPU. The CPUs of the past were designed to have many cores so that it could be easily rentable. People rented cores. Well, agents don't rent cores. They just want the work to be done fast. The economics of the past was dollars per core. That's the economics of cloud computing of the past. The economics of AI of the future is tokens per dollar or dollars per token. And so what we need to do in the future is to generate tokens, process tokens as fast as possible. And that's what Vera does incredibly well. So we're expecting to be very successful with Vera, but ultimately what we're doing is we're building infrastructure for AI, and it needs incredibly great storage. That's the reason why we built STX. It needs incredibly good networking. That's why we have Spectrum-X. It needs incredibly great GPUs, of course, and inferencing ability. That's the reason why NVLink 72. It needs incredibly great security and confidential computing, which is the reason why Vera Rubin's the world's first platform with end-to-end confidential computing. And it needs, great CPUs. We've got it all covered.
Your next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. I wanted to go back to the segmentation. So first of all, I'm just curious, where do you put the neoclouds across those two segments? Are they in hyperscale or are they in the AI cloud? Part of me assumes the latter, but I'm not so sure. And then, but just look at the magnitude of them. I mean, they're both about the same magnitude now. It almost sounded to me like you were suggesting that you thought the latter, the AI cloud, would grow faster, maybe going forward than hyperscale. Is that what you're trying to say, or do you just see like the same kind of growth coming from both segments?
First of all, you're correct that AI native clouds don't build chips, don't design their own chips, and they don't want to. They can't really assemble, unrelated parts together into an AI factory. And their patience, their tolerance for time to first token is extremely low. And their need for an architecture that has a great deal of offtake so that it runs every model, has customers from everywhere, is incredibly high. And so that's the reason why NVIDIA's architecture is so perfect for them. We offer every component, and whatever we don't offer, our ecosystem of partners offer it, and it's all fully integrated. It all works together. The number of customers that could rent it from an AI native is incredibly high. Basically, every single AI builder, every AI native startup around the world, SaaS companies, enterprise companies, industrial companies, and so our computing, our architecture is the most rentable of any computing platform in the world. So it's the most performant. It's the easiest to put together. It's the most rentable, has the best TCO, and it's the easiest to finance. And so all of those properties are quite unique to the needs of AI natives. It's in the second category. They're very similar to even OEMs and so on and so forth, large enterprises and so forth, surprisingly. Okay, so we put that in the second category. If you look at that segment, it started growing after the AI ecosystem developed in the hyperscale. Hyperscale developed AI first for a lot of reasons. You know, they have great computer science, they have excellent data center capability, and they also focus largely on consumer applications, which, if not perfect, is not the end of the world. It enhances the service so long as it enhances the service. And so for many of the other applications, industrial applications, enterprise applications, until the AI is very capable and does really productive work and does it safely, and it could do it in a way that can actually generate impact and income, it doesn't really get used. And so you expect the second category to develop slower than hyperscale, and you could see that in the numbers. However, long term, if you look at industrial and enterprise, clearly that's where future economics is going to be, because it represents some, 50, $80 trillion of the world's economy. And so, and it's going to be larger than that because of AI. And so I expect the second category to be larger over time, both in the near term, over the next several years. I think it's a foregone conclusion. Both are going to grow incredibly fast. I expect the second category to still grow faster, but both are going to grow incredibly fast. And then I'm hoping that within the next 5 years, physical AI and robotics segment is going to grow incredibly fast.
Your next question comes from Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon, and thanks for taking my question. Back at GTC, I believe you discussed a $1 trillion visibility into both your Rubin and Blackwell platform revenue, but I believe that excluded things like LPX, Rubin CPX, and the Vera CPU racks. Could you maybe give us a sense about whether the Vera CPUs are going to be the biggest source of upside above and beyond that $1 trillion? Are you contemplating other sort of combinations of products, including CPUs, that would allow you to gain an even greater share of that total TAM? Thank you.
In terms of incremental above the trillion, I would say one, the continued growing of share of the frontier AI models. I'm expecting to grow more share, and so I'm expecting that to grow. Number two, we didn't include any Vera CPU, standalone CPU, in that number, and so I expect that to be the second largest. The TAM is, of course, quite large in agentic systems, and all of our customers are quite excited about Vera, and we're going to sell a whole bunch of Veras. And then third would be LPX. Because as I explained earlier, LPX is designed because of its SRAM architecture, it has the benefit of very low latency, very, very high interactivity, but it's also its throughput, its context processing ability is also quite limited. And that's just kind of the nature of SRAM type based systems. And but the combination, we'll be able to address the entire spectrum of AI from pre-training to post-training to inference to agentic systems through the combination of Vera Rubin and LPX.
Your next question comes from Joshua Buchalter with TD Cowen. Your line is open.
Hey guys, thanks for taking my question and congrats on the great results. Colette, I believe in your prepared remarks, you mentioned GB300 is sort of the fastest ramp in the company's history. How should we think about Vera Rubin against this benchmark? It's obviously a new architecture at the silicon level, but it's similar rack. Does that mean we should expect a similar slope to the Vera Rubin ramp as the GB300, or should it be a bit more gradual given the new silicon? Thank you.
Yeah, what we have indicated for a while that we will be launching Vera Rubin in the second half. We will start in Q3. That will be our initial pieces together. And then once we get to Q4, we're probably going to start to see our ramping continue. It's hard to say at this point what will be a faster ramp, but again, we have demand already planned. We've got POs, we've got almost all of our major customers ready to go. And these are very complex systems that we need to put together. So I think it's just about the timing that it's going to take for us to get that into market. Nothing else other than getting from production of all of the different systems that we have ready for ordered. So a little early to say, but yes, we're going to start in Q3 and continue to ramp into Q4. And Q1 of next year certainly is going to be very big as well.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
Thank you. Before I hand it over to Jensen, please note Jensen will be giving the keynote at GTC Taipei at Computex on June 1st. We will also be participating at the TD Cowen TMT conference on May 28th and the Bank of America Global Technology Conference on June 4th. Our earnings call to discuss the results of our second quarter of fiscal 2027 is scheduled for August 26th. With that, here's Jensen to close us out.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand. Let me highlight my top 5 things. First, NVIDIA is the only platform that runs every frontier AI model. With the addition of Anthropic to our existing partners, OpenAI, xAI, MetaMSL, Gemini, and many others, our share of frontier AI is growing. Second, we are in every hyperscale cloud, supporting their core data processing and machine learning workloads, internal AI services, as well as supporting their demand for NVIDIA users in their public cloud services. Third, our full stack complete AI factory solution and vast global ecosystem let us uniquely address new AI data center segments, new AI cloud natives, new AI native clouds, and sovereign AI clouds, and on-premises enterprise and industrial infrastructure. This is that second category I was talking about earlier. Fourth, NVIDIA CUDA extends all the way to the edge. Robotics, autonomous vehicles, embedded medical instruments, AI, RAN, telco, base stations. The next wave is physical AI, with billions of autonomous and robotic systems operating in the physical world. This is the third segment we were talking about earlier. And rounding out the top 5 things, we have a major new growth driver, Vera, the world's first CPU purpose-built for agentic AI. Vera opens a brand new $200 billion TAM for NVIDIA, a market we have never addressed before. And every major hyperscaler and system maker is partnering with us to deploy it. The world is rebuilding computing for agentic AI and robotic physical AI. NVIDIA sits at the center of these transitions. We built NVIDIA Compute platform over 3 decades. One architecture, vast ecosystem, extreme co-design across chips, systems, networking, and software. We built it ahead of this moment so that when agentic AI arrived, NVIDIA would be ready. It has arrived. Look forward to catching up next time.
This concludes today's.
All right. That was NVIDIA. Q1 2026 earnings, stock relatively flat. Tanner, let's start with you. What was your reaction to the call?
Ooh, I get to take all the points from Jose, leaving him with nothing. Good luck, brother. Well, you're number 2 or number 3. Not to do you any wrong, Neil. Okay, so CPUs is the story of the day. That's what everyone wants to hear, right? They said they're on track, or they see a good runway of $20 billion worth of sales this year. for Vera standalone CPUs. That would make them the world's largest CPU supplier, which is what Jensen said before. This is why they deserve a premium at every turn, right? Now, the stock is not moving. I don't know exactly what they want to see. I think it's just, I don't think there was too much new this quarter in terms of what they actually said that was like truly mind-blowing. We know the build-out's happening. It's more of the exact same. I'm surprised by the sell-off just because the numbers are leading to cheaper and cheaper valuations. But overall, NVIDIA necessarily doesn't see a lot of that appreciation during the actual calls, right? What led it from 170 to 220 last time? You know, like the models improved, Anthropic showed off higher ARR. It's more usage over time. And so I do think that NVIDIA stock will continue to appreciate. It's just on what specific day does that need to line up? I mean, that's why I'm not writing short dated options or something like this for NVIDIA. But yeah, so I think the ending part there was also really important. Jensen laid it out pretty clearly. The agentic era is here. You know, enterprises are going to be building not hundreds of thousands, not millions, but potentially billions of agents over time. And agents will have sub-agents that work underneath them. That's all going to need more tokens, and tokens are going to need more chips. That's going to benefit every single semiconductor manufacturer, but it's definitely going to, you know, benefit the largest and best total cost of ownership, you know, GPU, CPU combo semiconductor manufacturer in the world. So overall, Jensen said they're taking market share in CPU. They're still taking market share, you know, abroad. They're working with every single company around the world, governments, different large agencies that need, you know, very specific privacy concerns and all of these things. And Jensen's trying to cover all of that. So good call, but more of the same. They're selling. I think it's honestly Anthropic and OpenAI that are going to tell us, you know, when the next leap is.
Jose, your thoughts on the call?
Yeah, I mean, Tanner missed a lot. I mean, I know he can't grab all the points, so I have to come here. No, jokes aside, some things that got me excited from the earnings call outside of what Tanner said was first, he did talk a lot about kind of market share gains in all frontier models. He did push Anthropic a lot, but I do believe it shows some indication that he might be winning market share with Gemini as well. That's kind of a little bit of the read. Maybe Tanner didn't want to share to the viewers just yet, so wanted to bring that one up. The other thing that I thought was pretty interesting was he talked about the enterprise and data center space. He mentioned that enterprise is really starting to pick up now, and enterprise is a lot harder to kind of build systems because you have so many different companies. You have over 500,000. I forget the number, but it was like some crazy amount of hundreds of thousands of companies versus AI cloud company, right? There's only like what 4 or 5 AI big kind of cloud service providers, a handful of neo cloud players, but you still have a vast majority of enterprise players that do need on-prem. It takes a little bit harder for them to get set up, but it seems like that's moving. So that's my second point that I thought was pretty exciting. The third thing, and I completely forgot about it, so I'm just going to say third thing one more time to see if I remember. Oh yeah, the third thing was the financing side. So he mentioned something in the transcript or kind of during the earnings call that was NVIDIA GPUs and NVIDIA solutions are not only the best total cost of ownership, but they're also the easiest and the best to finance. And what he meant is if you are a neo cloud player, you're going to more likely get a better rate if you go and say, I'm going to use this money to buy NVIDIA GPUs because the market knows that NVIDIA GPUs are selling out like no tomorrow. We don't really know what the other products are. Like we know there's partnerships, but we won't really have the data to say, look, the TPUs are selling out in external customers. We know they're selling out for Google internal workloads and for certain Anthropic, but it showcases that even though it's an AI chip, this AI chip is seen less risky to the banking world. And I think that's all very important, right? Because 1 percentage point could be a massive growth. I forget, I think it was Nebius who mentioned it, that 1 percentage or 2 percentage point difference in interest, or whenever you get a prepaid, can be hundreds of millions and millions of dollars. So I thought that was pretty interesting there. Hopefully we save something for Neil, though, because I know Tanner and I took some points there.
Probably not. But going back on the CPU story, $20 billion for this year, $200 billion total addressable market. I mean, it's a new total addressable market that they're in, and they're already at $20 billion for this year. It's incredible, incredible stuff. All of the growth that we're seeing now, again, yeah, they got the licenses for China, but that business is still a zero. And so I do wonder if at one point they are going to be allowed to increase from $0 to, again, a couple of hundreds of million, maybe $1 billion for the China business. Because it seems like they're ready, of course, but there seems to be something blocking them. But if there is no China, then I guess the rest of the world is big enough, and it seems like whatever they need to do, they're going to do. And I mean, the growth is incredible. The performance also for Vera, what they said, 1.5 times performance per core, 2 times performance per watt, 4 times density per rack versus the x86 architecture. So, I mean, this is going to be another money-making machine for Nvidia.
Can I quickly add on to what Jose said about the financing thing? I must have missed that, but that's a
My points are so good. Tanner just loves them.
Oh, I do, bro.
Yo,
Honestly,
Tanner,
you just
if
get.
you ever talk shit about Jose again, he will make sure you are reminded every time to never talk.
I didn't even talk. I just said. I remember last time
you
that
threw a
he
little
complained
jab,
that-
and Jose showed you who the real king is when it comes to analysis on Nvidia. Okay.
It wasn't a jab. Last time he said that he hated that I went first because I took all his points. So what's it called? The financing part, though, that's a serious benefit. I never even thought of that. Like, essentially, Nvidia has a AAA rating, so the companies that are giving them money, if they are betting on neoclouds being successful, the easiest bet is knowing what chips you're putting inside that neocloud. Like, if the clusters are Nvidia clusters, you have a way higher guarantee that you're going to find customers. So they even get better rates than the alternative. That's a pretty genius point from Jensen to bring up, and I'll give some credit to Jose there as well for finding it.
Credit to Arkady from Nebius for doing that with the Nvidia, the Meta deal as well.
Yeah, but we gave that to Jose as well.
Yeah, of course, he gets extra points.
Yeah, look, my takeaway from the call was CPU was not this much of a discussion last quarter, quite frankly, in any quarter. So Jensen, I think, really drew a line in the sand and said, hey, I know you guys like this whole CPU story with agentic inference, ARM, Intel, AMD, but we are going to be doing the most amount of CPU revenue with Vera. So I thought that was really important. And then number two, I think that the big takeaway here, once again, Jensen is trying to convince every analyst that CapEx will keep going up. And it's one of those things, man, we are in an experiment that we've seen before in industrial buildouts, but not at this scale, where the largest companies on the planet are in a prisoner's dilemma, where they're all competing with each other. They don't want to pay the Nvidia tax, but they kind of have to pay the Nvidia tax. They're getting more growth from paying that tax. So theoretically, it logically should justify, even with the law of large numbers, that they continue to pay that tax. And Jensen is in the best toll booth you could imagine, because he's collecting it from every single hyperscaler. Now, I think one thing he tried to say towards a couple of the analysts towards the end is that it's not only going to be hyperscaler CapEx. He's been saying this really since the end of 2025, that there's going to be sovereign nations and all these other smaller entities that inevitably end up contributing to the spend, which will diversify the revenue streams. And I think that's part of the new reporting framework that they have. But at its core, it's like if Google next year doesn't spend, they're doing what, 190 billion. If they don't spend 220, 230 billion next year, that's going to be an issue. And every indication is that they will keep spending. But I think Jensen just wanted to make sure that they will keep spending, and that the spend going to CPUs and GPUs will overwhelmingly come to Nvidia, which is why, there's still a reason to buy the stock.
I think what he's really trying to just highlight is like you look at CapEx spend being at 60, 70, 80% growth rates year over year. And what we're seeing from NVIDIA is putting up 80, 90, 100% growth rates on their end. And people are potentially wondering, okay, well, where are you finding this additional growth? And it's from the neoclouds, because obviously CoreWeave and Nebius and all these other names, Nscale, are growing faster than the traditional hyperscaler names on a percent base, not the actual nominal rate.
Jose, is there anything in the call that you didn't like? Anything to critique, or everything kind of went according to
there's actually one thing I wasn't a fan of. There was a question where someone asked about the CPU space, and if like this overall CPU shortage and an increasing demand in CPU was going to create some form of slowdown in the GPU market. And Jensen didn't answer it directly. The main thing he just said was the CPU space was an additive to the market, but he didn't say I would say he didn't give a clear answer. Maybe I didn't hear it. So if you guys did, about the GPU demand, because in my thought process, one of the things is data centers have limited amount of power, right? They have limited amount of power. So if you're adding more CPUs to the mix, does that mean we're losing some GPU potential because of that limitation to power? And I don't think, I think that's what the analyst was trying to grab, but Jensen kind of, it felt more political answer opposed to just the direct answer that I would have loved to hear.
I'm trying to think if there was anything else in this call that was really important. It was kind of a shorter call too. Like this one ended a little, like last call was, I think, about 30 minutes longer.
He was a bit tired, I think, from all the traveling and all the explaining why we're
all
still making a lot of money. Yeah.
If anyone is in the chat has any questions, we'll stay on another 5 minutes and take any questions here. But yeah, overall, I mean, it was a great quarter. Stock's obviously not reflecting it. It's the same thing that we've seen basically for the past year. The stock, I'm just happy we're not stuck in the 180s, because we were there for about 8 months before we finally broke out. And maybe we're going to be stuck in the 220s for a while, but I think there are bigger things than just Nvidia earnings that are affecting the broader AI trade right now and the broader market. So either tomorrow this thing dumps like it did last time, or we consolidate. Getting a pump back up to the 230s doesn't sound crazy to me, but I feel like the whole market would have to pump with that. S&P kind of taking a hit after hours as well, meaning it's, you know, not just Nvidia right here. By the way, Rocket Lab's down for everyone who's asking, because they filed a $3 billion ATM. So a little bit of dilution for Rocket Lab.
I mean, that's much less than SpaceX's $75 billion dilution that they filed. So what's it called? I wanted to drop this for a sec. I just want to preface this before looking at the numbers here. This was something that Jensen also said during the call. Is he said, you know, we've done deals with, I forget the names that he actually said, but then he prefaced by saying that he's not sure which announcements have actually been said and which ones he's not allowed to say just yet. So if you could put that up, these are some of the equity deals that they have been putting money into, at least at the time. You know, Intel was 129.44. That $5 billion investment was at that point worth almost $28 billion. Every single one of these investments in recent history are all in the green, every single one. As time goes on and they announce new partnerships, not only do you find, people can call it circular financing or whatever you want to call it, but it's leading to better equity gains, you know, guaranteed customers that come back to buy their product. And that's not just for GPUs, that's for CPUs, that's for networking, that's for all, like the combined, you know, extreme co-design. You're having extreme co-purchasers, bundlers of purchases. Or whenever you're talking about memory or CPO or any of these things, supply constraints also a very big concern. And the fact that Nvidia is lining themselves up to say, hey, we want to be first. If we come knocking, we want you to actually supply us. That's also what's part of the some of these deals like Lumentum or Coherent and stuff like this. So hopefully we see more of these types of deals, because it seemed like there was a sort of a mixed reaction on the dividend. it seems like there's a mixed reaction no matter what they do with their cash. But obviously, if you're making as much as they are, they're going to have to deploy it in every direction. So you're going to see buybacks. You're going to see overall like total outstanding shares come down. You're going to see their equity investments pop up, and you're going to see a higher dividend.
Question, I might have missed it. Did they, I'm shocked, unless I didn't hear it, but I'm shocked they didn't talk or in the Q&A session about memory prices or kind of like prices of other stuff, right? They didn't.
Yeah, I don't remember it.
Dude,
I think they have a lot of LTAs though. Like, if I'm not mistaken, Jensen was one of the first to lock in pricing for multi-year contracts.
I don't know how much Nvidia likes the story that's happening in memory. They mentioned a lot of things right here in terms of supply chain outside of memory. They are not investing in a Micron or a SanDisk or a SK Hynix. You know, they're not doing some public affiliation with them. And then the big tell for me today was Jonathan Ross, who works at Nvidia, got his company acquired for $20 billion, has architecture that sidesteps a little bit of the high-level HBM requirements. I mean, it's a really important clip. I can play it in a little bit if people want to see, but it's basically him saying, start building more memory fabs and start getting your gross margins to come down, because if you don't do it, we're going to figure this shit out. And DeepSeek, with their KV cache, already has seen a 90% reduction in the memory storage that they need as well. So now that doesn't mean the memory story is over, but there is a world where it's like, Jensen's the king here. I don't know if he's going to allow his margins to get hit by certain elements of the supply chain, because again, they are just elements of the supply chain. And it is, to your point, Jose, it's interesting that they didn't bring it up today, because that is the biggest story right now in the market, quite frankly, is memory.
Yeah, because every CapEx player said that one of the reasons they increased their CapEx was because of memory inflated prices. Now, I would love to see that clip. So if we don't play it, feel free to send it over to me. I haven't watched it. But one thing that I am seeing a lot of news report, I haven't confirmed, but it does seem like Samsung and SK Hynix are accelerating their chip manufacturing a little bit faster than previously expected. It seems like, again, it does. I'm not saying this is the top tier on memory side, but it seems like they're starting to accelerate that, and that can go pretty south if it's not handled correctly.
I think there was just recently a report on Micron as well that just said that they were outpacing their expectations for growth for.
Yeah, they had. So at the
JP
Morgan, I have it right here. So at the JP Morgan conference today, some quotes. Demand continues to grow for the foreseeable future. Our balance sheet has never been stronger. Demand continues to outpace our ability and the industry's ability to supply due to persistent structural factors. We focus on meeting customer demand. Our financial outlook has strengthened since our last earnings call. We're on track for another substantial record free cash flow in fiscal Q3. So obviously the memory story from Micron's perspective is really strong. This is what Jonathan Ross, the former CEO of Grok, still runs Grok at Nvidia, had to say today about memory.
Investors who are asking questions is, what is the bottleneck? What's the next thing that's going to be constrained? What should I do next? And that's not how this industry works. Every time a bottleneck gets big enough, people solve it. So as a person running a business, you're always going, hey, what is my biggest problem? And can I solve it? And when you look at some of the components that are limited, when they're a problem, but not a huge problem, people can charge a lot of money for it. But as they start to become a bigger problem, people start solving that problem. And so it's this constant shifting dynamic of like where in the supply chain is the biggest problem, but don't become too big of a problem, because then it'll get solved.
Yeah. So like memory is like the big theme today, right? As the biggest bottleneck in AI. But so what you're saying is, if memory continues to become a larger and larger bottleneck and continues to be extremely supply constrained, that you think it's going to be solved?
Yeah, exactly. So memory used to be a commodity.
Correct. Yeah, it was the most commoditized segment of the semiconductor supply chain.
Yeah, maybe a good way to explain this. There are two kind of goods that you can charge a lot for. One is a Veblen good, and the other is a Giffen good. Veblen goods, the more you charge, the more desirable it becomes, like luxury goods. Giffen goods are a little bit different. A Giffen good is, an example is rice. So if you start to charge more for rice, some people can no longer afford steak, So they actually spend more money on the rice. So by raising the price, not for a luxury good, but by raising the price for a staple, you can actually increase the value. And that happens to some extent until someone goes, let's stop eating rice and let's eat corn or something else, right? And so there's this inverse sort of headwind where if memory is too expensive and if people don't build enough of it, people are going to solve that problem technologically.
So you think algorithmic efficiencies like, for example, like DeepSeek's latest model release, the V4 release, compressed KV cache by 90%.
Exactly.
But the argument around that has been Jevons paradox, Jevons paradox, Jevons paradox.
But those engineers, them working on that problem is an opportunity cost. They could have been working on something else. If they had enough memory, they would have worked on something else. If it wasn't so expensive, they would have worked on something else. You make it the big enough it's the tall poppy. As soon as it gets too tall, it gets chopped down.
Got it. Yeah.
Necessity is the mother of invention.
I don't know. Maybe that's why Jensen didn't mention. Jensen and Jonathan Ross obviously are working very closely together. Maybe Ross is whispering in his ear, dude, we got to figure some shit out because yes, our gross margins are 75% for now, but we cannot have this type of pricing war that we're having with Samsung and Micron and let them have all the leverage here. This is ridiculous, right?
But isn't pricing already locked in for Nvidia? Like, it's not like they're negotiating every single quarter. I'm pretty sure they got the pricing for this year, next year, and by the end of next year, I assume all of them will have more capacity online, which then means, okay, if you can have more volumes, you're not going to increase the prices because otherwise, these big players are going to figure out how they would need less memory. Although I do still think you're going to need a hell of a lot more memory over the next couple of years, but eventually, yes.
Yeah, it goes down to the question of the forward PE on these memory names, right? Should they be increasing way further than that? And I don't know. It is interesting, though. Jensen didn't mention a lot of different parts of the supply chain, but the parts that he did mention, like the neoclouds, he didn't mention any names, which kind of sucked. I saw the chat. Everyone wanted Nebius or I read, and he didn't mention any of them, but
he doesn't pick favorites.
Oh, he definitely picks favorites.
He does not pick favorites.
He has put a lot of money into CoreWeave. It's his favorite.
And Nebius, the good ones.
Yeah.
I mean, I don't know. He'll sell to everyone. China, America, it doesn't matter. But it's exactly the same reason why I was so anti the China block, like the chip block from America, is because what do you think? China's going to stop working on AI whenever you don't give them chips? Like, they're going to solve the problem. Oh, they don't have EUV? You don't think they're going to find a new way to make chips? Potentially only have 7 nanometer chips. Okay, we'll build out rather than building up, we'll use our energy advantage and build way more data centers. Like I don't know. I don't think kneecapping some of those industries has worked out as well as some people have initially thought.
Let's end it off with the stock. How do you guys feel about the stock basically down 2%, not really doing much? I mean, I think all of us are in agreement, right? Like, yeah, it would be nice for it to go up, but it's like, it's a big company. Nvidia usually goes up on other people's earnings and other headlines, not usually their own earnings.
Hilarious, but true.
Yeah, I feel bad for anyone who bought like deep OTM calls this morning, but like it's just the stock doesn't move on earnings like that, not as easily.
Plus, it is a over $5 trillion company, so in order to move it after hours, takes a lot.
I look like I'm in that train station that Dumbledore was in at the end of Harry Potter. It's
I see it.
It's unbelievable.
Do you see a dead Voldemort underneath your bed?
I don't. I was gonna make some bad joke. I'll keep it to myself.
That's not your first time in California, right? You've been there before.
I think we were there together in
when?
San Francisco for probably Robin Hood or something.
Oh yeah, we were there together. Jose, any thoughts on the stock?
Nope. I mean, I liked everything about earnings. Nothing that scared me. A lot of things that excite me. Just AI continues to evolve. So don't really care about stock price right now. I'll take my 25 cents dividend, multiply by my few shares, and just have fun with it.
Someone said under my bed is Sam Altman, just curled up in a little. Just losing to Anthropic.
That is crazy. He didn't mention OpenAI at all. Maybe I missed it, but it was a lot.
I think he mentioned once. Maybe.
Oh yeah, when he said OpenAI and Anthropic are growing really fast, right?
Or maybe
Talked a lot about
collected.
Google. Brought
He
up
did talk
Google a
Google.
bunch. Yeah.
All right. Look, it was a great quarter. It's just we all kind of knew it would be. And so it is what it is. They didn't give you a reason to sell. Maybe it's not a reason for the street to buy right now, but there's not a reason to sell.
You guys are making it out to be like this was a bad go, like the, all right, well, time to go.
No, because I
It's
think,
like,
dude, it's like because people wanted to see the stock pump like they've seen SanDisk pump, and that's just not happening in
I get
Nvidia
it.
right now.
I get
you
it.
know? Or AMD, which went up freaking 40% in a week after its earnings. Like
the goal as an individual investor, at least for me, is to outperform the S&P 500, or else I would not be investing in individual self-directed stocks.
Yeah.
So, buying into a company that's growing at 85% and on pace to grow at 90, high 90 percentages is not something that I go, oh, well, only 55% net income margin or whatever it was at. I'm very, very comfortable shareholder knowing that in the past year, we're up 66% versus the alternative, and hopefully we'll continue if we keep up these great rates. Or maybe they end up taking the Apple path where they end up buying back a ton of shares. Like there's so much potential appreciation in this stock, and it doesn't necessarily just need to come from higher and higher market caps. It could be higher and higher ownership of the company, or return of share, dollars through dividends.
Bro, this is the best comment of the day. The 85% is 105% growth if we convert it to Canadian.
I know. I'm winning more than you guys. I lose on the currency. I lose on the currency exchange, but once I sell, it's a big payday.
Okay. Real quick before I let everyone go, just a few things about SpaceX. A couple things from the S1. Anthropic will start paying SpaceX $1.25 billion a month to use its data centers up until 2029, which is $15 billion a year from Anthropic to SpaceX for compute. For context, SpaceX's revenue was only $18 billion in 2025. So this NeoCloud deal they've done with Anthropic is literally their entire revenue every year for the next 5 years. Elon will serve as CEO, CTO, and chairman of the board. The NASDAQ symbol is SPCX. Elon has 85% control voting control in SpaceX. There is not going to be an independent board based on the structure of their company. So they're not going to need a traditional independent board. They have 10.3 million Starlink subscribers in 164 countries, 550 million monthly active users. SpaceX will be a quote-unquote controlled company, so it doesn't need a majority independent board. Musk can control matters requiring shareholder approval and can elect, remove, or fill Class B director vacancies. They do not expect to give dividends. June will be the IPO. And revenue was $4.69 billion Q1 of this year. Net loss was $4.28 billion, but they did spend $4 billion on part of the acquisition. So if they didn't end up acquiring, they would have had an $8 billion revenue run rate. It's not. It's at $4 billion, but nonetheless, IPO is still priced at around $2 trillion, and Goldman, Morgan Stanley, Bank of America will be leading the IPO.
They are generating 27 times Rocket Lab's revenue, which, if you look at the market cap, it's $2 trillion in market cap compared to Rocket Lab. So it makes sense, which means I assume when SpaceX goes public, if it goes down, Rocket Lab goes down. If it goes up, Rocket Lab goes up.
Seems like it could be a big proxy trade. That is correct. Okay. Thank you, everybody, for joining. Nvidia Q1 2026 earnings. They did what they had to do. They crushed it. We will see tomorrow how the market ultimately interprets it, but everything seems to be going in the right direction in terms of the raw numbers. Jose will be on my Market Opens tomorrow. He'll help break down some of the numbers as well, and we'll keep going from there.
This was awesome. Thanks, guys.
All right. Thank you, everybody. Have a great day.
Bye-bye.
We'll see you guys tomorrow. Bye, everyone.
Bye.